Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So in this video, we are going to discuss the MCQ and the theory component of paper 4, Cost and Management Accounting in our CA intermediate course. So now the coverage of this particular video is going to be entire MCQs given in our institute study material, and with respect to theories, we'll be seeing it in question and answer format. So I have just handpicked a few theory questions from every chapter, right, out of the past exam questions and RTPs. So this particular theory component, right, to this extent is 100% sufficient from an examination perspective, because generally one question gets tested as theory, right? For that one question, it doesn't make sense to go through the entire study material line by line for the purpose of answering one particular theory question in costing subject. Rather, it also doesn't make sense to omit theory and go. So you need to balance it, and that's why I have just coined a few questions, as in I've compiled a few questions from past exam and RTPs, MTPs, and all. Based on that, chapter wise, we'll also be seeing the theory questions. Now guys, this particular video is actually a compilation that we have taken directly from our regular batch. Our regular batch is for a duration of 160 hours, right? In our regular batch, we will cover the entire study material, 100% of the study material in terms of concepts, your illustrations, book back exercise problems, MCQs, theory, everything will be covered in a very, very comprehensive manner. So just to give you an idea about our regular batch, right? So from that regular batch only we have taken this MCQ and theory component, right? This video that you are watching right now. So now in our regular batch, we will be doing 224 classroom problems. When I say doing, I will be discussing and I will be doing this particular solutions, right, by hand, right, throughout this entire 224 problems. So it will not be like I will do and you will copy, you will note it down, right? For those who have already attended the regular batch, they know it very well, right? So the question is being read first, we discuss, we frame the approach, the solution, and it's like a teamwork. So the students also do it along with me, and in the process they learn, right? That's a different learning experience altogether, right? And having done these 224 numerical problems, 75 questions overall across all the chapters are given as questions for practice. So basically these are some some additional questions that I'm giving for practice. Basically, if you finish these 224 questions, you can easily attempt these 75 questions. These 75 questions are some relatively lesser standard questions that are available in the study material, right? And apart from that, right, we have also given something called as a practice manual, which is a compilation of past 12 plus RTPs and MTPs chapter wise. So that is going to be 230 numerical problems, right? So now this classroom solution, the problem, is the base for students to attempt all these QFPs and practice manual questions and all of that. So overall, you will be witnessing 512 numerical problems, different varieties of numerical problems, a very, very holistic and a very comprehensive coverage. This is what we actually cover with respect to the numerical component, right? That is the predominant chunk of time in our regular batch. First, conceptual understanding. I give a lot of examples and I ask students to take running notes, right? So that's how it works here, because not everything gets printed in the handbook. So a lot of explanation happens in the lectures, right? From that students take notes, and that's how they learn the subject. That's a very good way of learning the subject, right? Now in that regular batch, I also cover MCQs and theory for every single chapter, right? Now this MCQ and theory is what we have compiled it, right? And we are presenting it to you as a single video for the benefit of all the students. So here on an overall, if you see 156 MCQs across all the chapters of our costing syllabus are covered, and 83 theory questions are present in our this particular video, right? Now, by the way, when I say this MCQs, 156 MCQs, sir, where did you take this MCQs from? From institute study material. At the back of every chapter, right, they have book back MCQs, right? So we have covered the entire 100% of institutes MCQs. Clear with this? With respect to the theories, I've taken the past 5 plus exam questions, RTPs and MTPs, and I've compiled the important theories chapter wise. So all these coverage are chapter wise, not random. Clear with this, guys? Fine. Now please follow the same order in which you need to watch this particular lecture, because we do it in a certain sequence for a reason, right? Clear with this, guys? And one more thing, so in your exams you will be having case study based MCQs. In this video, case study based MCQs are not covered, so I will be making separate videos on case study based MCQs as and when even institute comes up with their own publications regarding that. But as on date, right, whatever is available in the institute study material, that has been completely covered in terms of MCQs. So now, guys, talking in terms of coverage, we all know that MCQs carry a total of 30 marks, right? And of course, there is theory question. Approximately this theory question is somewhere between 10 to 14 marks, right? So this is going to be the overall coverage. But once again, I'm telling you, in this particular video, what you're going to watch is only your normal MCQs, direct MCQs, right, that are present in our institute study material. Case study based MCQs are not covered here. But this will help you attempt your case study based MCQs, because it is not, the discussion here is not reading the question and ticking the answer. No, I will tell you the thought process behind the correct answer, and we will be discussing which answer is correct and why the other answers are wrong. To that extent, we will be discussing, and conceptual clarity will also be there. Clear with this, guys, right? So with this, let us enter into the MCQ and theory discussion of costing syllabus. That's your latest syllabus introduced in 2023. Right, guys? So let's get started. So let's go to the theory part. Theory is basically kept as a separate chapter called chapter 16. So page number 385. Okay. So here, if you see this costing theory that I have mentioned, it is not a separate chapter as per your material, study material, but I have kept it. Inside this also, concept chapter wise I would have bifurcated, clear, so that it is easy for you to revise the day before your exam. So this basic concepts is chapter number 1 that we did, correct? I told you chapter number 1 of the institute study material is full theory, correct? We will be seeing this later towards the end. See, there are so many things like what do you mean by opportunity? See, we would have seen a lot of things. Certain things are pure theory concepts that we will be seeing only finally. Okay, I don't want to do it right now because it will hinder your logical understanding of the subject. So I don't want to do it right now. I will do it towards the end. Don't worry. But for the remaining chapters, as and when we complete, we will do the theory part. So the first chapter alone, there are so many theory questions. I put it in question and answer format. It's easy for you to prepare for your exams. Clear? Now, cost sheet. This is the second chapter that we see, right? In this, I think only 3 questions we have seen. All these questions are nothing but past RTP exam questions. Only the questions that gets repeated generally, I'm going to discuss it here. But for that, no major value addition. Look at this. State direct expenses with examples. Okay, so we saw that, right? So direct expenses means expenses other than direct material, direct labor, which are incurred to manufacture a product or for provision of service and can be directly traced in an economically feasible manner to a cost object, correct? The cost object can be a unit or a job, correct, guys? Yes. Then the following costs are examples: royalty paid, payable, hire charges paid for hiring specific equipment, cost for a product or service, specific design drawing, cost of product or service specific software, other expenses directly related to your production and all. I think we saw a few more points there. So those points, amortize the portion of molds and jigs, those things also we saw. You write all those things. Clear with this, guys? Nothing great beyond this. It could be a straight question. Clear? Next. Explain how direct expenses are measured and their treatment in cost accounting, right? The direct expenses are measured at invoice or agreed price net of any rebate and discount, but includes the duties and taxes for which ITC is not availed, commission and other directly attributable costs. So basically, how do you value the direct expenses? So direct expenses, when you're accounting for it, you need a supporting voucher, no? You need a document based on which you account. That is nothing but, for example, I'm paying royalty to Suzuki. Suzuki will give me an invoice, correct? Or they will give me an agreement, correct or not? Based on that only, I will arrive at the value. I will get the value, correct, guys? Yes. So how are they measured? This is all they are asking for. Nothing great. Using the supporting document called invoice or agreed price. Are you clear with this? Out of the blue, you cannot say, so and so I am actually incurring so much. No, you need to have a supporting document. That's what they are mentioning. In case of subcontracting, where goods get manufactured by job workers independent of the principal entity. I told you, right? If I don't have my own staff, my own workers, I can supply the raw material to a third party and get the production done by him, and he will give me the final product, correct? So in case of subcontracting, where the goods are getting manufactured by the job workers independent of the principal entity, they are measured at agreed price. This guy will say, for every unit I am using my labor and converting your RM into FG, I will charge you 5 rupees, 10 rupees and so on. Clear with this? Where the principal supplies some materials to the job worker, the value of such material and other incidental expenses are added to the job charges paid to the job worker. So if that job worker, if he is adding, for example, you go to a tailor, you give a torn cloth, correct? He has to stitch. The basic cloth is yours, correct? But for him to stitch, he uses that small extra thread and all, no? So some material he uses, correct guys? Yes, those material costs and all, he will add it, and finally he will say, for me to stitch every one of your cloth, I will charge you 5 rupees or 10 rupees. His 5 or 10 rupees, whatever he is charging, will include his material labor overheads. For me, it's a direct expense because I'm not using my own material or my own labor. Are you clear with this, guys? Yes, that is what they are mentioning here. And treatment of direct expense, you know, it forms part of prime cost of the product or services to which it can be directly traceable and attributable. In case of lump sum payment or a one-time payment, the cost is amortized over the estimated production volume or benefit derived. If the expenses incurred are of insignificant amount, that is immaterial amount, they are treated as a part of overheads. Generally, if they are small, they will include it in overheads. This is theoretically, but in question, if it is given, you take it. If not, you will leave it. That's all. Are you clear with this? This is what generally they have given. So you read it once, that's all. You can write it in your own words in exam. Don't mug up theory and all. Costing theory and all, don't mug up. Clear? Any issue here, guys? Simple. Then let's go to the next one. This is an excellent question. State the advantages of cost sheet. When I said excellent, I was sarcastically saying excellent. See what they are. Advantages of cost sheet. You must read this. It will blow your mind. First, cost sheet provides total cost figure as well as per unit figure, right? That is the first advantage. Then it helps cost comparison. One company's cost sheet, another company's cost sheet, you can compare. So it helps in comparison. It facilitates preparation of cost estimates. That is called cost sheet, no? It facilitates preparation of cost estimates required for submitting tenders. It provides sufficient help in arriving at the figure of selling price. Cost of sales plus profit gives you selling price, as if we don't know that. Correct? Idhukku oru point. For cost of sales, they have mentioned 1 point. Correct? Then for selling price, they have mentioned 1 point. Adavadhu, onnume illadha eppadi perusa aakanungadhu, you should learn from this. That is how to create a storm in a teacup. They say this idiom, right? You know that. How to create a storm in a teacup. Nothing is that. Out of that, you will project as if it is something great. You should learn it only from this question. It facilitates cost control by disclosing operational efficiency. That is, with the way you are curtailing your per unit cost and all, you can clearly know whether you are being efficient or not. These are some 5 advantages. Theoretically, I cannot do any value addition beyond this. This is nothing but you just go through it once and you will get it. Write your own things in the exam. Clear with this, guys? Yes? Now, I think that's about it. These are the major theory questions. If at all it comes, rarely theory questions come from cost sheet. If it comes, that also I am covering. Clear with this, guys? Now, let's go to the MCQs. Let's go to the MCQs in this chapter. So please go to the MCQ section. So this is chapter 17, the MCQs. So it's page number 436 of our book. So all these are available, right? Shall we get started, guys? Let's discuss and do it. Look at the end of the chapter, MCQs, answers are also there, but please don't look at the answer. Discuss with me, participate. I want you guys to tell the answers and we will finish off. 10 MCQs. All the MCQs are given in this study material. I've taken it. Clear with this, guys? Next, come on, let's get started. Generally, for the purpose of cost sheet preparation, costs are classified on the basis of functions, variability, relevance, nature. You tell me which is the correct answer. Now, generally in this case, what you will do is, you should eliminate the wrong answer. You tell me, cost sheet achieves which objective? Guys, 3 objectives of a subject. Which objective? Stock valuation profit computation. For the purpose of stock valuation profit computation, will I use variability? No. relevance and nature and all? No. It is based on functions. That's why I said functional heads of a cost sheet. You remember? It is based on the functions. Functions means what? Where am I incurring the cost? In the factory, or for which function am I incurring the cost? Factory, admin, or am I selling? Are you clear with this? So the correct answer here is going to be what? Functions. You can put a tick here. You can put a tick here. Are you clear? Here itself you put a tick in a pencil or a pen, whatever it is. Basically at the end also I've given the solution. Right? Then which of the following does not form part of prime cost? Guys, don't jump to the answer. Students do this. Prime cost. You just put and tick. No, not form part, which means it should not form part. Clear? Cost of packing. Cost of packing will come. Obviously, cost of packing will not come. Why? Primary packing, where will it come? Separate line item. Secondary packing, where will it come? S2OH. So, which means definitely it will not come in. Read the others also. Cost of transportation to bring the materials to the factory, added in material cost. GST paid on raw material, input cannot be claimed. I told you it is added. Look at this. This is how they are testing. We covered everything here. See, we are reaping the benefits now. Next, overtime paid to workers. Any amount paid to workers, EF, PSI or anything paid to workers. Workers are direct labor. It comes under direct labor prime cost component only, guys. Yes or no? So basically this is the answer. Clear with this? We are discussing the logical reasoning for all these things. Next, A Limited received an order for which it received a special frame for manufacturing. It is a part of, you need not even look at the solution. It is a part of, look, it received an order for which it purchased a special frame for manufacturing. It is a part of what? Tell me. You are saying it is a part of direct material. Okay, what is your answer? You are saying it is a part of factory overheads. Read the question once again. Read the question once again. A Limited received an order. For me to fulfill this order, it purchased a special equipment, special frame for the purpose of fulfilling this order. Now you tell me. Now you tell me. Guys. Factory overheads, direct material. You want 50-50 option? It is not direct material, it is not factory overheads. Think, guys, think. We have done this. We have done this before. I'm surprised. Special equipment also, I gave you a hint. Where did we see specific equipment, special equipment? There we saw separately. Guys, come on. Second. Direct expenses. Here we saw higher charges for specific equipment. I told you this comes in job costing. For the purpose of this particular job, I am buying some frame. That frame is not a material. Using that frame, I manufacture. Are you clear with this? Direct expense. If take a red ink and do it, or put it as important, whatever it is. If you got it wrong, your eyes should hit your eyes. It should tell you that you got it wrong here. Okay, wherever it is put a O or important, whatever it is, you do it. Never miss this, guys. This is definitely not acceptable. I gave an example also. This is why I asked you to revise it again. Right? Fine. Now, what's the page number? 436. 436. Okay, right? So it's going to be direct expenses. Clear with this, guys. Then, salary paid to plant supervisor. Don't even look at the options. You know, plant supervisor. Direct or indirect? Guys, first, direct or indirect? Indirect. Why? He is a supervisor. You know the supervisor. Huh? Where is it incurred? Factory. So, indirect manufacturing cost is going to be what? Factory overheads, guys. Yes or no? Are you clear with this? No, it's very, very easy. No need to look at the options only. Then, depreciation on director's laptop. Depreciation on director's laptop. Tell me. Administration overheads. That's all. He's a corporate office guy. Then, a manufacturer has set up a lab for testing of products for compliance with the standards. Salary of this lab staff is going to be what? Is going to be what? For testing the product. Testing means what? Output. I am testing it, seeing whether the quality is okay. Obviously, it's a quality control cost. Clear with this, guys? Any doubt here? Separate line item. Then, audit fee paid to the auditors. Audit fee paid to the auditors. It is going to be admin overheads. Students will confuse. They will get confused between option A and option D. They will think, you guys only told me, you remember, audit fee will not at all come, sir. It is not a part of costing only. No, audit fee is administration related. All these activities, without audit, how can you run your company? Start audit or whatever audit it is. It's mandatory as per the compliance, company's law. Next, salary paid to factory store staff is going to be what? Tell me guys, factory, is it going to be production cost? Production cost means what? Okay, fine. Clearly they have given, this is very specific, factory overheads. Why? Salary generally is indirect. Fine. In the factory location. That's all guys, simple. Don't mug up. It's very, very simple. Then canteen expenses for factory workers. Canteen expenses for factory workers. It is canteen expense, no? But it is for factory workers. So it is going to be factory overheads. Canteen expenses for directors or top level management. It is going to be overheads. Any difficulty? That's all guys. Then last one. A company pays royalty to the state government on the basis of production. It is treated as, don't commit a mistake, royalty, you guys know, direct expense. And with this, we have finished one beautiful chapter, cost sheet. Done. Guys, shall we? All the conceptual knowledge only. Based on this, we are going to attempt. Guys, quick. Let's get started. 30 marks MCQ. With all the concepts that you have right now, just go and attack this. Shall we get started? First, fixed overhead costs are not affected in monetary terms during a given period by change in output. But this statement holds good provided. Now, wait, 1 second. Let me just explain this. Now look at this guys. Now, let us say I have a factory. Okay, I have a factory. For this factory, I am paying a rent of 10,000 rupees. Correct? This factory has a capacity to produce, let us say, 1 lakh units. Okay, clear with this guys? 1 lakh units. Clear with this? Now, whether I produce 0 units or I produce 10,000 units or I produce entire 1 lakh units, will the rent change? Will the rent change? No. Why? Because rent is a fixed cost. Suppose I want to manufacture 1,20,000 units. Can I manufacture using this factory? Max, I can only produce how much? 1 lakh. So what I do is, I am taking the next factory also and paying another 10,000. This factory also has another capacity of 1 lakh units. Correct guys? Now you tell me, if my fixed cost is up to 1 lakh, if my volume is up to 1 lakh units, does my fixed cost change? No. But beyond a certain level, if my volume increases, then even my fixed cost will increase, guys. Correct? Not proportionately, but I told you in our subject as of now, I told you fixed cost remains constant in total. Variable cost remains constant on a per unit level. I told you, right? Now, fixed cost can also change in total. The subject matter of study about this is in CA final. But theoretically, here they have just asked us, if your volume increases beyond a particular point, then even there will be a change in the fixed cost. Are you clear with this? Does it make sense, guys? Does it make sense? Look, so in this case, if the increase in output is substantial, see, from 10,000, I am increasing it to 20,000. This will not change your fixed cost. From 10,000, I'm going to 1,20,000. Yes. Now it can change the cost. Are you clear with this? One second. I think they have used a double negative here. So fixed costs are not affected in monetary terms during the year by a change in output. So they are saying, when will the fixed cost not be affected? When there is not a substantial change in your output. Correct? That is, the fixed cost will be affected only when there is a substantial change in your output. Clear with this? Look, they have used the double negatives here. So fixed cost is not affected only when your volume does not change substantially. So when there is, provided there is increase in volume is not substantial, answer part A is correct. That is, option A is correct in this particular question. Guys, clear with this, guys? Are you all clear with this? Any issues, any problem here? Done. Next, capacity is defined as actually utilized capacity of the plant. So what is the capacity that is actually utilized of a plant? Guys, the utilizable capacity. Perfect. Practical capacity. Very good. practical capacity. Why? That is the capacity that can be utilized. What is actually utilized, that is different. That is going to be your actual capacity. Fine. Anyways, they have given the practical part. Are you clear with this? Practical capacity is going to be the utilizable capacity. Next, allotment of whole items of cost to cost centers or cost units is called as, that is, look at this. I told you there are two things in overheads: apportionment and allocation. You remember that? Allocation means what? These items are readily available on a cost unit level. Cost unit means what? Basically, the unit for which you're computing the cost. In this case, your departments can be taken as a cost unit. So, readily available on a departmental level. So, what will you call that as? What will you call this as? Allocation. So, it's going to be cost allocation. Clear with this, guys? Clear with this? Know it logically. Don't mug up anything. Then, this is a simple question. Primary packing cost is a part of ABCD. Which one? Primary packing cost is a part of, out of these four, which is the best alternative you can take? Don't question back the question. It's a part of selling. It is a part of production cost. To arrive at the cost of production, you add 4 addition, 1 deletion. No, in there only it comes. They are just saying it's a part of, clear, it's a part of production cost. How can it come under selling? That is secondary packing. Right, I told you what example? I gave you this. Coke and all I gave you, right? You cannot go and ask him like this. I told you all these things. Yes. Next, director's remuneration is a part of. Guys, quick, admin overheads. Then, which of the following is not a classification of overheads based on functionality? Factory admin fixed selling. What stands out? Fixed, odd one out is fixed. Then, bad debt is an example of. Now, this is absolutely wrong. This is absolutely wrong. Bad debt should not be considered in our subject. But out of these four, which is the best alternative? Selling overheads, right? But it is wrong. Be very clear. Bad debts is not at all a part of our subject. I told you bad debts is, it indicates inefficiency in recovery of overheads, inefficiency in recovery of amount from your debtors. That will never form part of your costing itself. Next. Normal capacity of the plant refers to the difference between what and what. The normal capacity refers to the difference between what and what. It refers to the difference between the practical capacity and the estimated idle capacity. So practically, I can have, what was the example I gave you? Practically, no, that was theoretical. 300 was theoretical. So then I said, practically I can have how much? 280, I just said something, 280, right? Practically 280,000 units I can produce, but out of this estimated idle capacity, that is normal idle capacity, generally these are unavoidable. So the difference between your practical capacity and your estimated idle capacity only gives you your normal capacity. Guys, clear with this? Then the difference between the actual factory overheads and absorbed factory overheads will be usually at minimum level, provided the predetermined rate is based on the four things. Now you tell me guys, 1 minute, when you are calculating the predetermined rate, guys, predetermined rate, right? Budgeted overheads divided by budgeted base quantity. That budgeted base quantity will be what? Maximum capacity or what? Normal capacity or labor hours, machine hours, what will it be? It has to be in normal capacity. What they are saying, the difference between the actual and absorbed, that is your under or over absorption, will be kept minimum, will be lesser, provided for the purpose of calculating the predetermined rate, you take the normal capacity as the base quantity. The normal capacity can be normal machine hours, it can be normal labor hours, it can be normal units, anything. But that's why these two are straight away gone. It cannot be direct labor or direct machine. Who said if I use direct labor hours, will the difference between the two be less? Or if I use the machine hours, will the difference between the two less? No, it has to be normal capacity. Clear with this, guys? Yes. Are you clear with this? Yes. And finally, which of the following overhead costs may not be apportioned on the basis of direct wages? Which of the following, odd one out of the four, which one I will not apportion on the basis of direct wages? Managerial salaries. Obviously, why? Because they are sitting in the corporate office. Clear with this, guys? This is what is given here. And one more thing, just 2 minutes, guys. Promise 2 minutes, not beyond that. Right? Let's go to the theory section. Now, we just have 4 questions here, I guess. About 5 questions. That's about it. Right? I'll just walk you through this. Fine. You need to read all this theory, but I'll just tell you how easy it is. Explain single and multiple overhead rate. Simple, guys. What is this? Blanket rate versus departmental rate. That is what you need to write down. Single overhead rate is equal to overhead cost of the entire factory divided by total base quantity. Whereas multiple overhead rate is going to be what? Department wise. You need to calculate. Clear with this? Some relevant theory they have given. Then discuss with the example the level of activity method of segregating the semi-variable cost into fixed and variable. Now guys, how do you segregate your semi-variable cost into fixed and variable? The difference in cost divided by the difference in quantity will give you the variable cost per unit. That variable cost per unit, you will put it in the total equation. You will arrive at the fixed cost. That is total cost minus variable cost gives you the fixed cost. So they have just picked one example and they have put it here. Ideally, we did this in basic concepts, but ideally in your study material, it comes under this chapter. Why? Because semi-variable cost and all comes under overheads. Guys, clear with this? Write it in your own language. Give it a single reading. Write it in your own language. Beyond this, not much of value addition can be done from my side. Clear with this? Then, explain the difference between allocation and apportionment. Allocation, the figures are readily available on department wise, whereas apportionment, you should use a reasonable base. That is what? Benefit derived ratios, you need to use it. So for example, your factory rent on the basis of your space covered, area covered and all, you just need to do. So that is what they have given it here. Clear? Then state the basis of apportionment for the following overhead costs. This was tested earlier in an attempt November 18. Air conditioning, on what basis will I apportion? Common air condition I have for the entire factory. So based on area, based on floor area. Timekeeping based on number of workers, depreciation based on capital values, power or steam consumption, technical estimates, or you can even write kilowatt hours, electric power, that is machine operation, horsepower of machine, number of machine hours, all these things. Clear with this, guys? So they are just asking you the basis of apportionment. This was a 5-mark question. In the theory question, they had asked for 5 marks. So you just need to mention this and leave it there. That's about it. Easy, guys. Easy. Don't think theory is some rocket science and all. It's very simple. And finally, explain the treatment of under or over absorption in cost accounts. Look how they have mentioned here. For theoretical purpose, this is how you need to write. Now what we do? Classify, find out the reason. Normal reasons, product cost. Abnormal reasons, period cost. Normal reasons, product cost. Apportion between 3 items using supplementary rate. The period cost, directly take it off your costing period. This is how we write. Look, in theoretical way, how you need to write. Look at this treatment of under or over absorption. You should write off to the P&L when the difference between the actual and absorbed is small. That is, when your under or over absorption is a small figure. This is only for theoretical purpose. Clear? What they are saying is simply transfer it to the costing P&L. That is, don't look whether it is normal or abnormal. Take it to the costing P&L. If the difference is large, then investigate the causes. After that, the abnormal loss or gain shall be transferred. That is, investigate the reasons to the extent it is attributable to abnormal reasons, inefficiencies and all. You have to take it to your costing P&L. Use of supplementary rate. When will you use it? Only when the under or over absorption is attributable to price level changes, normal reasons. Under this method, the balance of under or over absorption may be charged to the WIP, FG stock and the cost of sales proportionately with the help of supplementary rate. And there is a third method called as carry forward to the subsequent year. This I will cover when we are doing this cost accounting system chapter. We will be seeing journal entries. Every single thing, journal entries. There only, if I tell you, you will be able to understand. So there are broadly 3 methods, but we saw only 2 methods, right? Writing off the P&L and use of supplementary rate. There is also a third method, that is do nothing. Do nothing, literally. You need not do anything. That is carried forward to the next year. What is it and all we will be seeing along with the ledgers. If I explain, only then you will be able to understand. Clear with this, guys? With this, we have comprehensively covered this entire chapter of overheads. Every single thing we have covered in this chapter, not even a single thing has been missed out. It's a comprehensive coverage. 20 sums we have done in the classroom, 10 MCQs we have covered, and then 7 questions for practice. I have just discussed it. These are all exactly same as what we have covered in the classroom discussion sums. Clear with this, guys? Please practice these 7 questions. Do it right now, immediately. Just take a small break and start doing it. Okay, go to your house, do it. Fine. And then past 5 RTPs, past 5 exam questions, also do it. Apart from that, yes, or you can also use that practice manual, whichever way you want, you can do it. Once you are done with that, you are sorted. This chapter is done. Clear with this, guys? This is one of the biggest chapters in our subject costing, one of the biggest. So we have successfully completed this chapter threadbare. We have covered every single concept. Beyond this, there cannot come anything at all. I can tell with this much level of confidence. Here, we have even covered the theoretical part to the extent that is relevant for your theories. Clear with this, guys? Okay, so shall we get started, guys? Yes. Now, you guys know the logic and concepts of this chapter. So with that itself, we can finish it off. First question. What is a cost driver? That is, a cost driver is an item of production overheads. Is it correct or wrong? A cost driver, is it an item of production overheads? No. A common cost which is shared over cost center. Is it a common cost? A cost driver, is it a cost, guys? Okay, fine. Okay, let me read out everything. Then any cost relating to transport, an activity which generates cost. Out of these four, which is the best answer? A, B, C, D. Huh? A, B, C or D? You own your answer. Which one you feel is correct? You feel B is correct. Okay, right. What are you saying? D is correct. What are you saying? You are also saying D. Now, a cost driver is an activity which generates the cost. The factor that drives the cost is only your cost driver. How can you say it's a common cost? So, cost driver means, let us say, for machine running activity, machine hours is the cost driver. Is that a common cost which is shared between cost centers and all? No. Clear with this. It is an activity which generates cost. For this only I am incurring the cost. Clear with this, guys? Yes. Next. Yes. Answer is D. Next. In ABC, the costs are accumulated by activity using what? Read the question carefully. Don't jump to the solution. What are they asking? Costs are accumulated by activities using what? Cost driver, cost object, cost pool, cost benefit analysis. Accumulation of costs is called as cost pool. That's all, guys. What is the big deal here? Cost pool, that's all. Clear? Don't fear. Just because they are asking this in CA exam, even if they are asking 1 plus 1, you will think it's something else, it seems. Right? We have studied, we have spent a lot of time in this chapter. Do not worry. Have the courage. That is the biggest problem. You guys know it. Now you need not fear anything. A cost driver is, once again now. Okay, fine. Let us see. Cost driver is A, a force behind the overhead cost. B, an allocation base. C, is a transaction that is significant determinant of cost. D, all of the above. Huh? Come on. Tell me. B. D, all of the above. Any other answer? You're saying C, it is a transaction, which means the first two are not applicable. If you're saying it's only C, it means the first two are not applicable. Huh? B is also correct, which means all of the above only. What do you say? All of the, obviously the cost driver is the force behind an overhead cost. Is this statement correct? Yes. Is that an allocation base? Yes, cost driver is an allocation base. That is base quantity only. It is a transaction that is significant determinant of cost. Because of this only you are able to determine your cost. Absolutely, all of the above only. Clear with this? Logically think, guys. Do not go by any bookish definition. It will not work out. Only logics and concepts will help you out in this subject. Next, question number 4. Which of the following is not correct? Guys, this is where these guys play around. Now, read the question carefully. Read it carefully. They are asking which of this is not correct. The problem is we all jump into the answer straight away. They are asking which is false in these statements. Clear with this? Now, production scheduling. Okay, so the activity. So, it is driven by cost driver is for production scheduling. It is production runs. Dispatching, number of dispatch orders. Correct or not? Yes. Goods receiving. What is this? Goods received orders. Correct or not? Yes. Inspection is driven by machine hours. Huh? It is number of inspection or inspection time or whatever it is. So definitely this is wrong. So this is the odd one out. So the answer is D. Production scheduling. Yes. How am I going to schedule my production? It can be driven by your production runs and all. Clear with this, guys. This way you can find out. Elimination method, you do it. Clear with this. So for the following, which of the following is not correct? D1 is not correct. Next. Transaction undertaken by support department personnel are the appropriate cost drivers. Find the one which is not appropriate. Now, they are saying number of purchase, supplies, customers' orders drives the cost associated with new material inventory, work in products, FG. The number of production runs undertaken drives the production scheduling, inspection, material handling. Quality of raw material issued drives the cost of receiving department cost, and the number of packing orders drives the packing cost. Basically, They have given the cost driver and they are saying it drives which activity, and they are asking you to find out which of the following is false. You read all the four and tell me which seems to be false. They have given one cost driver and they are saying this is the cost driver for these many activities. They have given like this. Which one is false? You read and you tell me. Logic only, nothing to be read and known and all. You guys know this already. Tell me. Huh? Which doesn't make sense, you tell me. Okay, you are saying C. Okay. How about you? C. Everyone is saying C. Very good. Why? The quality of raw material issued drives the cost of receiving department. What is this? What is this? This is absolutely, it doesn't make any sense at all. Right? Quality of the raw material, it has nothing to do with, the cost of the receiving department. Absolutely right. That is, the fact that this is wrong is right. Okay, so the quality of this, C is not correct. So obviously you can take it up. Next, guys, steps in ABC include identification of their activities with their respective cost. Cost means what? Cost pool. Identification of cost driver for each activity, and computation of the allocation rate per activity. That is nothing but cost driver rate. Then allocation of the overhead cost, the products or services based on the activity involved. All of the above. Obviously, all of the above only. Basically, step 1, step 2, they have split it into 3 steps and written. Next, which of the following is not a benefit of ABC? Which of the following is not a benefit of ABC? Number 1, accurate cost collection. Is this a benefit or not? Relative to your traditional system, yes, you have more accuracy. Next, improved decision making. Absolutely correct. How do you say it is improved decision making? For every activity, I know the cost driver. Correct. This is where we started off by saying all costs are direct and indirect. It is only the cost driver that determines whether an activity, whether a cost is direct or indirect. So if you're able to control the cost driver, you can definitely control your cost. This is what ABC says. So this is also correct. Better control on activity and cost. Absolutely. Reduction of prime cost. Now ABC has nothing to do with prime cost. It only operates on your indirect cost. So it's a no-brainer. Directly you can say reduction of prime. Can you reduce prime cost components here? We don't even deal with prime cost. Clear with this, guys? Next, see, this is where, guys, your logical understanding, conceptual understanding will take you in the long run. Just imagine these kind of questions come in the exam. 1 mark just like that you can take in the first half an hour of this exam itself. You can get a good level of assurance that you're going to clear the paper. Just imagine the confidence that you can get. Just imagine, put yourself in that position. 30 questions, 30 MCQs. You have, spent a lot of time in the classes. We practiced MCQs, 30 marks and you're done with it. Now that is, so much, the next, let's say 20 minutes, you are covering one more 10 marks. Max, I'm saying. In the first 50 minutes of the exam, you are guaranteed of passing. Now, what more do you need? That's all. You will be having a lot of confidence. You will just go with full confidence. The rest 2 hours, 10 minutes, you can just finish it off like that. That is the power of conceptual learning. Tell yourself that, right? So you need not worry about anything. You guys are preparing well, so why should you worry about it? Next one, question number 8. The steps involved for installation of ABC in a manufacturing company includes the following, except borrowing fund, feasibility study, building up necessary IT infrastructure and training of line employees, strategy and value chain analysis. So basically what this is if I want to install a new ABC system, that is, till now I was doing traditional overheads, now I want to newly formulate ABC system in my company, what should I do? The first one, definitely I should do a feasibility study. That is it worthwhile going for this ABC system or not? I told you, the cost collection exercise should not exceed the cost itself. Clear? I will do a feasibility study. Once having done that, I will develop the IT infrastructure and the training of employees. Yes, I need to train people to tell them, I need to teach them that how this ABC works, how am I going to collect the cost from now on and all, right? And once that is done, yes, we have something called as value chain analysis. That is, you have a list of so many activities. Every activity is actually, we go to every activity, we actually identify an activity as a value added activity or a non-value added activity. These things are there in your CA final, right? Basically, every activity we will see. For example, let us say in my lectures, okay, I have two types of activities. Activity number one, the teaching activity. Activity number two, suddenly some infrastructure related, that is your IT related, some issue came in, right? I had to spend time to solve this issue. Some tech problem had come. Clear? So for that also I had to spend some time. Let us say for technical support, I use some time. So this is also one activity. This is also another activity, correct? Now you tell me, out of these two, which one is a value added activity, which is a non-value added activity? From the viewpoint of the student, you tell me. Teaching is a value added activity. Now tech support is a non-value added activity. So what will you say? Sir, even if you take more time in teaching, we are not bothered. In fact, we only benefit. But this tech support, so this is a waste of time. If this increases, it is definitely not beneficial for us. Correct? No? Right? So now what will I do? All the activities I will find out. Now each of the activity I will tag it as value added, non-value added, and I will try to reduce all my non-value added activities. Are you clear with this? This is where it just went to the next level. ABC went to the next level. I told you ABC is a game changer in the industry. This is how it became a game changer in the industry. Because now you've listed out the activities, give them a tag. Say whether it's value added, non-value added. In value added activities, I will not touch. I will not do any discounting, right? So just like how, just because, many students, they wanted to, like, sir, just finish it in so many hours, or just finish it in 50 hours, 60 hours. No, that is not possible, right? Here we cannot discount. Whatever it is, content will be delivered. That's about it, right? But these kind of things, sir, every day, some little time we are wasting out in our infrastructure, IT infrastructure. Now that needs to be fixed. Are you clear with this? Or let me even put it from the viewpoint of the company. Now, if I spend more time in this tech and all, right? Tech support and all, downtime and all. Now just see, during that time also, all this lighting, camera, this AC, everything runs. Clear? So for me, if I reduce this non-value added activity, the other costs will also automatically reduce. No? Are you clear with this? So both from the viewpoint of the customer, also from the viewpoint of the producer also, you can tag the items as value added and non-value added. Clear with this, guys? In final, you will be seeing in that self-paced learning modules, in your strategic cost management, there is also one more category called as gray area. That is, certain activities, you know, it is definitely value added. Certain activities, you definitely know it is non-value added. Certain activities you will be confused. Yes, this is required, but I cannot even call it as value added. That is called as a gray area. So all these categorization, you will see it in CA final, but that value chain analysis comes only from, that's a concept called value chain analysis that stems out only from your this chapter called as ABC. Now tell me, these are all the steps involved in ABC. Borrowing funds, why is it not? It is not even a part of costing. It is a part of financial management. Are you clear with this? Right? How much amount to raise, and that too, from where to raise. So these are all financing decisions, investment decisions. Investment decision talks about how much to raise. Financing decision talks about from where I need to raise, all these things. This is clearly FM. So ideally speaking, you need not even go through all the points. First point itself, clearly you can say this is FM, not even costing. Forget A, B, C, activity based costing. No, this is not even costing. Clear with this? Nowhere in costing will be seeing about financing related decisions and all. Borrowing funds, no, we will not be seeing anywhere. Clear with this, guys? Next, which of the following statements are true? Statement number one, activity based management involves activity analysis and performance measurement. Two, activity based costing serves a major source of information in activity based management. This is what they are saying, right? Activity based management means what? Look, taking decisions using ABC. That is what it means in simple words, right? Now, you logically think, is the first statement, do you think is true? Activity-based management involves activity analysis and performance measurement. Yes, looks true. Does it seem true? Yes, this is true. Next, activity-based costing serves a major source of information in activity-based management. Does it look true? Does it look true? Activity-based costing, that is splitting it into activities, arriving at the cost pool. This serves as a major source of information in activity-based management. Management means what? I'm controlling overall, right? Does it make sense? Yes, that's all true. So you can just write option B. That's about it, guys. Clear with this? Find out which of the statement is true, which is false, and based on that, ideally it's a true or false question. So they wanted to put in MCQ. So true, false, true, true, false, true, false, false. So just to fill up the four what do you call, options, they have done this. Anyways, next, the key elements of activity-based budgeting. What do you mean by activity-based budgeting? Using the concept of activity-based costing in budgeting is called as activity-based budgeting. So we just saw in the previous sum, no? That is question number 8. So we use the budget figures. But we budget not based on departments, we budget based on activities. So the key elements of activity-based budgeting are as follows. Are which of the following? Number 1, type of activity to be performed. Should I need this data? Yes, I need what activity I'm going to perform. Number 2, quantity of activity to be performed. Yes, I need that also. Number 3, cost of the activity to be performed. That is, this is nothing but cost driver quantity. This is cost driver quantity. This is nothing but cost pool. This is nothing but the activity, right? All these things are nothing but every column that we did in all our numerical problems. So obviously we need all of the above. Clear with this, guys? That's about it. Very simple. That's about it. These are all the MCQs given in our ICAI study material that I have covered. Right? Beyond that, anything extra, if it is there, I will just make a separate video on that and I will give you, not a problem. Clear with this, guys? Are you clear with this? So with this, we have finished what? We have finished this chapter called as activity-based costing. Yes, shall we start? Right. Now, under non-integrated accounting system, everything is conceptual, guys. No need to mug up. Under non-integrated accounting system, so which of the following is correct? Same ledger is maintained for cost and financial accounts. Is it correct? Non-integrated means what? Separate. So separate ledgers are maintained for cost and financial accounts. Which is correct, guys? Obviously B only is correct, right? Any problem, guys? Nothing. Great. Next. Yes, this is what I wanted to tell you. Notional costs. Notional cost means what? I have not incurred the cost. For example, let us say I'm using my own factory premises. I'm using my own factory premises. Now, do I pay any rent? Do I pay any rent? No. But if I don't use it for myself, I could have rented it out. Correct? So had I rented it out, I would have got some opportunity cost. I mean, I would have got some benefit. But since I am using it for my own purpose, I'm losing out on that benefit. That's opportunity cost or notional cost. Correct? Now, do we account for notional cost in our financial accounts? Do we account for notional cost in financial accounts? Financial accounts. So only if you transact with an outside party, you do it. Correct? Even ideally in cost accounts also, we don't do it, but we use it only for decision making purpose. And I told you decision making control and all comes under management accounting technically. Correct, guys? But still, some people, very rarely, some people account for it in cost accounts also. Some people, generally we done even a single question where we had accounted for notional cost, imputed cost, opportunity cost and all. No. But still, some people do it under only in costing. That is an option. In financial accounts, definitely not an option. Clear with this? So now you tell me, you have an option of considering it under costing only. So in that case, you tell me, now in this background, you tell me which of these 4 are correct. Maybe included in non-integrated. Correct? It is definitely not included in financial accounts. So definitely it cannot come in integrated. The option itself is not there. If at all you include, you can only include it in costing separately. That too, not many people. Globally, we don't follow it. But yes, there is an option. That's all they are saying. Clear with this, guys? You guys remember opportunity cost comes under the second objective of our subject. Guys, clear? Decision making. Hello? Variable cost, fixed cost, opportunity cost, sunk cost. That flower example I gave you for sunk cost. Opportunity cost, we saw CA company 1 versus company 2. Which company to take 1 lakh per month salary, 1.5 lakh. Guys, you remember it? Yes, we don't consider it generally, but if at all you consider, even then the option is available only for costing. So you can maintain it only if you're maintaining a non-integrated account, you can do it. Guys, clear with this? All right, clear with this? Fine, this is what I wanted to tell you. Apart from that, I think everything else we've covered. Under non-integrated accounting system, the account made to complete the double entry is what? What is a self-balancing ledger? GLA, also known as cost ledger control. So 3 is D. Correct, guys? Then integrated system of accounts are maintained separately or same? Same. In the same set of same books of accounts. So 4 is B. Guys, clear with this? Next, under non-integrated system of accounting, purchase of raw material is debited to which account? Purchase of raw material, ma. Purchase is Purchase of raw material recorded under which, debited under which account? That's all, material control only, no? Guys, correct. If you are following integrated system, purchase, purchase. Even in integrated, we have for cost ledgers, the 10 ledgers will be maintained, I told you. Maybe the creditor's account will be credited or two bank will be there, but debit will only go to your SLC. Now, while preparing integrated, did we maintain purchase account? If you maintain purchase account for purchases, sales account for sales, then how can you track your stock? So when you are following integrated or non-integrated, it is only for costing, separately or with accounts. In that case also, the 10 ledgers of costing will be retained. So they have just confused you by asking this. Guys, come on guys, come on. Next, under non-integrated accounts, if materials worth 1500s are purchased for a special job, look at this, biryani, veg biryani example, right? So for a special job, then which account will be debited? Which account? Directly it will enter the kitchen, no? Guys, yes. Which account? Work in progress, or some people prepare a special job account. Basically, work in progress. Special job means what? The respective job, if it is going for a job. Clear with this, guys? That is a subledger of WAP only. We've seen this. Guys, clear with this, right? These are all, see, some finite points, how they are asking in MCQs. These can be asked as MCQs, no? Right? If you know it, you will just love it. That's all. Which account is debited if materials worth 500 are returned to the vendor under non-integrated accounts? Which account will be debited? Which account will be debited? Huh? Tell me guys, which account will, see, if I'm purchase returns, what will be the entry? Generally, what will be the entry? Purchase returns. Yes, okay. So creditors account debit if it is there to SLC. Creditors is not there. So because the non-integrated, it will be what? Cost ledger control, also known as GLA. So obviously the debit will go to CLC. Guys, don't hurry up here. Please, you have 1 minute solid for every one mark question. You please be patient, because here you don't have the step marks and all. If it is wrong, if it's gone, that's all. Clear with this? Easy. Please don't fall for it. They have clearly given debited. Next. Which of the following items is included in cost accounts? Which of the following items is included in cost accounts? So, which of the following items is included in cost accounts? Huh? Notional rent. Usually not. But then look at the other three. Donations to be considered. Will we consider? No, not for business purpose. No, guys, no. Right. Transfer to general reserve. Do we even do all these things? No. Rent receivable. It is a non-operating income. Clearly, no. If at all there is something that can be considered, may be considered, it can only be notional rent. Clear with this? Out of the 4 options, this is the option that is more appropriate. That's all. Clear, guys? Fine. Then, when costing loss is 5,600, admin overheads under absorbed being 600, the loss as per financial accounts should be how much? Come on. They have given the costing profit. They are asking you to arrive at the financial profit. Right? So, under absorbed means what? In costing, I would have debited less. Correct? Under absorbed means costing, I would have debited less. Under absorbed. What do you mean by under absorbed? Under means less. That less is debited where? In costing or in financial accounts? Absorption concept itself is there in costing only. Right. Right. So I would have debited less in. I would have debited less in costing. Right. Which means costing reports. Costing reports. Costing reports more profit. But I now need to arrive at financial profit. Here they have clearly given starting point is costing, ending point is finance. Right. So now I need to what? Subtract. Guys, correct? Thambi. Tell me what is the problem. You are looking so confused. What happened? Tell me. What happened? You tell now. What is the problem? Face it. They have said admin overhead is under absorbed. Okay. Under absorbed means what? Under absorbed means what? Your actual absorbed. So actual is more or absorbed is more? Under absorbed. Actual is more. So absorbed is less. Correct, which means the amount debited in my financial accounts will be, Sollempa, confident sollempa, will be more, which means the profit report under financial accounts will be, yes, tell me no. So financial profit will be less, costing profit will be more, right? Now we are starting from costing, we are going to financial profit. So currently my costing profit is how much? More, and financial profit is less. So from this figure I need to arrive at this figure. So now I need to subtract only, no? You are not convinced, right? Yes. So now what do? So from a loss of 5,600, you further subtract how much? 600. So now what will be your loss under financial accounts? So the loss under financial accounts will be 6,200. Guys, clear with this? You guys are understanding? See, generally we start from financial profit and we reach costing profit. Here they have asked us to specifically start from costing profit and reach at financial profit. So this is how you do it. Clear? Yes, you guys are understanding? Then ninth, which of the following items should be added to costing profit to arrive at the financial profit? Which means what? You are starting from costing profit and you want to arrive at financial profit. Clear with this? It is the other way around. Logically think. Which of the following will I add? Which of the following will I add? First you tell me over absorption. What will you do? Over absorption means what? So actual absorbed. So over absorption means what? Absorbed is more, actual is less. Correct, guys? Don't get confused. Logically, patiently think. Don't panic. Right? Absorbed is more, actual is less. Correct? Absorbed is more means what? I am debiting more amount to my costing P&L, which means what? Which means what? The profit under costing will be less, whereas the costing profit under financial will be more. I am starting from costing profit. I need to arrive at my financial profit. I will do what? Add. Clear? So there is also an option called all of the above. So let us check for the others also. Interest paid on debentures. Interest paid on debentures. So interest paid on debentures, what will happen, guys? Financial profit will be slightly lesser, but costing profit will be more. So I now need to subtract. So clearly this is the only item to be now added back. Clear, guys? Because the other option is all of the above, that will not come in. Similarly for income tax also, income tax would have been an expense under financial profit, reduces my profit, whereas the costing profit is relatively more. So I only need to subtract. So the only item to be added here is over absorption. Clear, guys? Please practice sums in this area. Now you're getting very confused. Don't worry, you're not alone. Many people get confused. The problem is you get panicked. You feel that I need to answer immediately. No. Have that patience. Just see how this works. All these arrows, that's why I taught you. Put it up and just see. This is all it is. Logically you write down. Need not mug up anything. Clear, guys? Done? Done? Fine. So now let's also do the theory. Let's quickly catch up the theory part. So we have a few theory questions here. By the way, guys, I think the previous chapter ABC also there was one theory question that I didn't do earlier. Okay, let me just first do that theory part. In ABC chapter, there was only one. What is meant by activity-based management and discuss how it can be used. So basically, activity-based management means what? Using ABC for the purpose of your management decisions. Through the ABC, look at this, the term ABM is used to describe the cost management application of ABC. Right? It is a costing tool to manage the cost at activity levels known as ABM. That is, when I am budgeting itself, I will not budget department wise, I will budget based on activities, and then I will find out the cost drivers. And if I wish to do a cost reduction exercise, if you want to reduce the cost, I will go and try to reduce my cost drivers, because only because of my cost driver consumption, my activity cost pools are created. Guys, clear with this, right? So this is what they are saying. So it can be used for cost reduction, for business process re-engineering, for benchmarking, for performance measurement and all. They have given some theoretical part. Basically, using this for some managerial decision making is only called as activity-based management. Clear with this, guys? Nothing beyond this. You just give it one reading, put it in your own language if at all they ask. Clear with this, guys? Right. Now, cost accounting system. So how many questions there? Oh, only 3. Okay. Fine, guys. So now here all these theory questions that I've kept are either past exam or RTP or MTP questions. So beyond that, nothing great is there. So we will also cover that. See, we are covering numerical problems. We are covering MCQs as well as we are completing the theory also. But theory part, I am not doing every single question from your study material. There is no point in doing that because it's not a theory subject. If at all they ask some theory area, we are just touching upon the past exam questions, RTP or MTP questions only with respect to theory. MCQs and questions, 100% coverage of ICS study material. Here, if you want, you can do it, but there is no point because again, theory also, if you do it, then again, that would also take a lot of time. Unnecessarily, it's not required. Rather, here alone, we are doing a smart way of preparing. Clear with this, guys. This is sufficient for the purpose of your theory part. Is reconciliation of cost accounts and financial accounts necessary in case of integrated accounting system? Explain. Tell me, guys. Is it necessary? Integrated, is it necessary? What are you thinking? In integrated, do you need RECO? No. Yes or no? No, right? Tell me no, only then I will know. Fine. No, it's not required. Why? Because we report only one profit. They have given all this explanation in a big paragraph. Look at this. The integrated accounts give full information in such a manner so that the profit and loss and the balance sheet can be prepared according to the requirements of law and all. Look at this. What are they given? So are kept in the same set of books, right? So both the costing as well as financial accounts are maintained. So basically you report only one profit. Guys, are you clear with this? Are you clear with this? So basically it is not even required for you to reconcile. This is what they have given in a big paragraph. What you do is you read it once, write it in 4-5 points. That's all. Logically, you know the answer is what? No. Reason, they are maintained in an interlocked manner. Together they are maintained only one set of books of accounts. So I prepare only what? I prepare only a single books of accounts and I report only one profit. So instead of having GLA and all, the respective financial accounts are parked in the respective ledgers. Cost ledgers, I prepare that also simultaneously. So there is no problem, no concept of reconciliation. Clear? You put it in your own language and write. They will not reduce marks. Don't start to mug this up. It will not work out. It is not required also for your exam. Next. Explain the integrated system of accounting and state its advantages. So integrated system means what? So cost ledgers and financial ledgers are maintained in interlocked fashions. Advantages. Number one, no need for RECO, right? Number two, less efforts. Why? Only one set of books. Then less time consuming. Reason, again the same thing, only one set of books. It is an economical process. Why? Only one team is required. I need not have two separate teams. Relatively, it's cheaper for me. Guys, clear with this, right? Indicate for the following items whether to be shown in cost accounts or financial accounts. This was tested earlier, long time back in November 22. Now look at this. Preliminary expense written off. Will it be a costing item or a financial item? Financial item, right? You can write FA. Then interest received on bank deposits, financial item. Dividend interest received on investment, financial accounts. Salary for proprietor at notional figure though not incurred. So if at all it comes, an option I can have in costing. Clear with this? That's what they have also given, costing. Then charges in lieu of rent where premises are owned, which means what? This is also a notional rent only. Own premises, opportunity cost. If at all it comes, it can come in cost account. Then rent receivable. Obviously, income, the only income considered in costing is what? Sales. That's all. So financial accounts. Loss and sale of fixed assets, financial accounts. Interest on capital, whether it's notional or not ever. Okay. Interest on capital at notional figure, though not incurred. Ideally, it will not come under cost accounts and financial accounts. It will only come under financial management. Ideally, your weighted average cost of capital and all. Because see, it's not because notional figure we are ignoring it. Interest is a financial item. So we don't consider it, but they have just gone by the word notional and they have given the answer cost accounting. So we will also take it as such, but you know that it shouldn't be considered. It's wrong. Goodwill written off, amortization, financial accounts, notional depreciation on assets fully depreciated. So cost accounts. This is at least fair because it's a manufacturing related cost, notional cost. You have an option of considering it in your cost accounts. Clear with this, guys? So with this, we are done with this particular chapter as well. Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now let's go and finish off the MCQs in this chapter, job costing. So please go to the MCQs section. So which is in the back side of our handbook, the second part of our handbook. So shall we get started, guys? Yes, fine. So now the first question. In case of product produced or jobs undertaken are of diverse nature, The system of costing should be used is as which of the following should be used as a system of costing? Process costing, operating costing, job costing, or none of the above. So what is it? So in case the product produced or jobs undertaken are of diverse nature, which means what? Not homogeneous, customer specific products. Obviously, it's a no-brainer job question. Now, don't think that, sir, why they are keeping it so simple. Since they have classified it under this chapter and they are giving it, you know it is job costing. In exam, it will not be like that. So it will be one among so many questions. So you should know. Clear with this, guys? Right. Next, the production planning department prepares a list of materials and stores required for completion of a specific job order. This list is known as, okay, so now this is ideally covered under materials chapter, okay. So the chapter that we are going to see later on, materials chapter. So basically what they are saying is, look, now let us say I need to complete one job A, okay. Now for me to carry out the work in job A, first I should list out what are all the materials required, correct? Right? Now let us say, whether it is job costing or unit costing, anything, let us say for me to manufacture 1 unit of pen, okay? So what are all the list of raw materials I required? Maybe I will say I need 5 grams of plastic, right? Then maybe 2 grams of ink, right? And something like, okay, so 1 nib I need, right? And so on and so forth. Like this, I prepare a list of raw materials required to manufacture 1 unit of my finished product. In case of unit costing, it is called as unit. In case of job costing, it is called as a job. That is the final product. But for me to manufacture that, what are all the list of materials required? That is actually called as BOM. BOM means bill of material. It is a very popularly known jargon in all the manufacturing industries. Without BOM, they cannot actually even start the production, because this bill of material is nothing but, it is like for your cooking, you need a list of details required. The list of, this is not your, what do you call that, recipe. No, this is not recipe. But before recipe, first you will list out what are all the items I need to carry out this cooking process, correct? That is called as bill of material. In bill of material, they will not say like how to convert this RM into FG. They will just say the list of raw materials required for every 1 unit of my finished product. Clear with this? Ideally, this comes under materials chapter. We will be seeing it. Don't worry. I'll be having a detailed discussion just about your, the raw material procedure. We'll be having something called as materials procedure. How the materials are ordered and how they are issued into the production, how they are converted into FG. For this, they need to follow one sequence. There are certain jargons that we'll be using, like materials requisition note. I've already told you, you remember, right? Materials requisition note. There's something called as goods received note, bill of material, and all of that we will be seeing in materials chapter. But since they have asked it here, we are just answering. So the answer is going to be BOM, bill of material. You go to any manufacturing setup, BOM is something that they keep talking about every day, because based on this, they will clearly know, okay, I want to produce 10,000 units of FG. Go to your BOM and you will see per every unit of FG, what are all the different types of raw material you need. Just imagine for me to manufacture one car, I will be requiring 30,000 different types of components, correct? Right? One gearbox, right? And one handle. Like this, for me to manufacture a car, what are all the things I need? First, I need to collect. No? Are you clear with this? So based on that only, I can even plan my purchases, I can plan my issues and all these things. This is called as BOM, bill of material. Clear with this, guys? Right. Next. Job costing is similar to that under batch costing, except with the difference that a job becomes a cost unit, batch becomes a cost unit, process becomes a cost unit, none of the above. What is batch costing? We will be seeing it in the upcoming next session itself. We will be seeing. Do not worry about it. So this is actually, you tell me out of these four, which one seems to be kind of logical for you? You know nothing about batch costing. You forget it. Job costing is similar to batch costing, except with the difference that, no, which of the four do you think makes sense out of this? Huh? So a job becomes a cost unit, as simple as that, because we saw here every cost object is going to be a job. Are you clear with this? What do you mean by a batch costing? In the next session itself, we will be getting to know about it in detail. Are you clear with this, guys? Fine. Next. The job costing, which of the following documents are used to record the issue of direct materials to a job? which of the following documents are used to record the issue of direct materials to a job? Now, I told you guys, from the stores, right, to the factory shop, right, to the factory shop. Now, just like that, will the stores manager issue all these units? No. First, what this guy should do? This guy should request for materials through what? WhatsApp? No. Through a proper document called as material requisition note and all. That is what it is. Ideally, all these things are a part of materials chapter. It is not confined to job costing. Any unit costing, batch costing, job costing, anywhere you see, it needs to happen through a material requisition note. That's why all these things are ideally a part of materials chapter, which we'll be seeing it there only. But anyways, they have given it, we are doing it. That's about it. Clear with this, guys? Right? So the fourth one is B. Next. The most suitable cost system where the products differ in type of materials and work performed is. Now, differ in type means what? It is customer specific, or in other words, heterogeneous, not homogeneous. Which is the costing system that you use? Obviously, it's going to be job costing. Clear with this? In process costing, we'll be seeing it is generally used in industries which are process driven. What do you mean by that? We will be seeing that later. Operating costing, obviously not. It is something that we are yet to see, right? Operating costing is nothing but service costing. Okay, there is something called as operation costing. There is something called as operating costing. Operation costing is similar to process costing. Operating costing is nothing but your service costing for your service industry. This is not obviously service industry, so it's going to be a job costing only. Clear with this, guys? Are you clear with this? Right? Next. Which of the following statements is true? A. Job cost sheet may be used for estimating profits of a job. Is this true or not? Job cost sheet can be used for estimating the job profit of a job. Yes, obviously this is true. Fine. The last option is none of the above only. So obviously this is the right answer. You see the other ones. Job costing cannot be used in conjunction with marginal costing. Who said? In the first lecture itself, I told you, I bifurcated the entire subject into 3 buckets. You remember? Right? One side I said it is cost collection exercise, chapter that talks about components of cost, material, labor and all these things. In between, I'm not talking about the objectives of costing. I just prepared this entire list of chapters. I bucketed into 3. I said the first one talks about the components of cost. In between, you have something called as methods of costing. That is sector wise, how do I use the costing principles. And the third one, I told you, it's called as techniques of costing, where we saw marginal costing, standard costing, budgeting and all. So these are called as techniques of costing. These can be applied to any sector. These are just another innovative ways of using costing to arrive at meaningful decisions. So costing techniques can be used in any of the sectors. Are you clear with this? So even in this sector, I can use marginal costing and all. So why have they said marginal job cost cannot be used in conjunction with marginal costing? No, this is wrong. And a production order is an order received from a customer for a particular job. No, that is called as a job order. A production order means it is for the entire production. So all these things are not right. Anyways, only the first one is right. Clear with this, guys? Right? Are you all clear with this? Right? Next. Which of the following statement is true? A job cost sheet may be prepared for facilitating routing and scheduling of the job. Is this correct? Facilitating routing, scheduling of the job. Scheduling means what? Like which one to be performed first, which one to be performed next, right? Facilitating or routing and all these things. Do we prepare that? We will use job cost sheet for that? No. Why do we prepare a job cost sheet? To collect the cost job wise. That's all. Correct? So the first one is not right. Second, job costing can be suitably used for concerns producing uniformly any specific product. Is it true or not? Uniform product, job costing you use. Is it correct or not? Absolutely wrong. We use it only for customer specific product. Uniform products, which one will you use? Unit costing, right? This is also wrong. Next, job costing cannot be used in companies using standard costing. Is it true or not? Standard costing is a technique. I told you, it is a technique of costing. Clear with this. That technique of costing can be applied anywhere across all sector. This is also false. So what is the right answer? Neither A, B, C. Are you clear with this? Are you clear with this? Generally, we never have this kind of an answer. So students feel that at most they will either go for B or C. Generally, I have observed that students generally go for B or C. No, it is all the three are wrong in this case. Clear with this, right? If you want, you mark it as important. Guys, make it very clear. Techniques of costing are different from methods of costing. Methods of costing means what? Costing, that is the manner of calculate cost collection exercise. How do I collect the cost? And this is going to differ sector wise. Are you clear with this? Broadly, there are two methods, unit and job. That's all, right? There is a hybrid version called as batch, and all other process costing is an extension of unit costing. Your contract costing is an extension of job costing. All other things that we see are all an extension of only unit or job. Are you clear with this? Whereas, so these are cost collection exercise carried on sector wise. Whereas your techniques of costing means what? Your marginal costing, your standard costing, your budgets and all. Marginal, standard we have not done. Budgets, you know. Yes, budget. Let's say you have an exam 3 months from now, right? You will prepare one budget, like how many hours I have out of this per day, how many hours I should study for which subject and all that. That is called a budget. Now, budget can be prepared for a processing industry. It can also be prepared for a job costing industry, for a unit costing industry. Yes, it is all pervasive. Are you clear with this? So techniques and methods are different. Please don't confuse these two. Are you clear with this, guys? So with this, we have covered all the MCQs in this chapter. Of course, we've also got some theories. Right? Can you just tell me where's the theory? Just a minute. Let's see if there is any theory here. Okay. 405 is it? Okay, fine. Right. Look at this. So state, let's also do this theory question. See, this was repeatedly asked. State the differences between job and batch costing. Okay, right. So this you can't answer right now because, you know, we are yet to do batch costing. Once we do batch costing, you yourself can actually cover this. Not a problem at all. But let me just tell you, job costing is used for non-standardized, non-repetitive products as per the customer specifications. Right? Batch costing is actually used for homogeneous products produced in continuous production flow in lots. Don't worry, in the next session itself, we will be learning what it is. Right? This is cost is determined for each job. Cost is determined in aggregate for the entire batch and then arrived on a unit basis. I will tell you what it is and all. Don't worry. Jobs are different from each other and independent of each other. Each job is unique. Products produced in a batch are homogeneous and lack of individuality. See, this part we will be seeing. Do not worry. If I tell you right now, you might not be able to understand. So this job costing part, are you able to understand the 3 points here? Right? It is used in non-standardized, non-repetitive products industry. Then each job wise you collect the cost and then the jobs are independent of each other. This you are getting it. Once we finish batch costing, you come here, you will automatically understand all of this. I will give you some really superb examples that you guys can relate in your everyday life also. Clear with this, guys? Right? So with this, we have come to the conclusion of this chapter. Right? Shall we get started? Yes, fine. First, different businesses, in order to determine the cost of their product or service, follow which of the following? Businesses, different businesses, in order to determine the cost of their product or service, okay, follow which of the following? Methods of costing or uniform costing, different techniques of costing, none of the above. I told you, sector-wise applying your costing principles is basically your methods of costing. Clear with this? Uniform costing means everyone follows the same. No, definitely not. Right. Here, none of the above also is ruled out. Look at this. Either of these two, methods or techniques, please be very clear. Methods talk about the manner of cost collection exercise, whereas techniques are about what? I told you, budgeting and all is a technique. Right? Applying the costing principles across all the sectors to arrive at a meaningful decision making. Clear with this, guys? Methods and techniques, are you able to differentiate between the two? Right. The next one. In order to determine the cost of a product or service, the following are used. Adhe question that they have asked again. Techniques of costing like marginal, standard, methods of costing, comparatives, all of the above. Only methods to determine the cost. It's only methods of costing, manner of cost collecting exercise. Guys, clear with this? Do not forget. Do not forget. Right. Next. Unit costing is applicable where? Which of the following, guys? Product produced are unique and no two products are the same. Is this the case? Will you use unit costing when the products are unique? Guys, tell me. Yes, sir. Unit costing, you will use it only when products are similar, homogeneous. Guys, answer no. Yes, right. Obviously, this is not the case. Dissimilar articles, not the case. Homogeneous particles are produced on a large scale. Obviously, this is the place where you use it. Clear with this, guys? Right. Next one. In case product produced or jobs undertaken are of diverse nature. Diverse means what? Unique, different. Then which system of costing will you use? Tell me. Yes, job costing. That's all. Clear with this? Now you are able to understand. Conceptually, if you understand, it's going to be very simple, guys. Next, job costing is applicable to all industries regardless of products or services provided. Is that the case? Guys, no. Is it a technique of costing? No. Suitable when similar products are produced on mass scale? Absolutely not. Method of costing used for non-standard, non-repetitive product. Guys, clear with this? Right? So this is the answer. Read the question carefully. Please read it carefully. Next, question number 6. The production planning department prepares a list of materials and stores required for completion of a specific job order, and this list is called as, we've already seen it, BOM. I told you, right? Bill of material. For me to produce 1 unit of FG, right? What are all the components of RM I need? Or this FG could be 1 unit, or it could be 1 job, or it could be 1 batch, whatever it is. Clear with this, guys? Right? Then next one. Batch costing is a type of, is it a type of process costing? No. Is it a type of direct costing, differential costing and all? No. I told you it's a hybrid animal, you remember, right? It's a part of unit and job. Unit is not given, only job is given. So, right, you take job. Clear with this, guys? Now, without understanding the concepts, you can't attack all these things. Clear with this? What example I gave you for batch costing? How many examples I gave you? Printing press and textile industry, right? Tirupur belt and all I told you. Next, batch costing is similar to job costing except with the difference that, what is the difference? Come on, guys. What is the difference? Job becomes a cost unit. Is that the case? Does job become a cost unit? Here the cost unit is a batch. Look at this. The batch becomes the cost unit instead of a job. Yes, right, obviously. Process, none of the above, and all is not the case. So here, a batch becomes a cost unit. Clear with this? And inside a batch, you average out. This way, it is similar to unit costing. I told you, right? Next, ninth one. The main points of distinction between job costing and contract costing includes which of the following? This is what they are asking. Now, guys, I told you contract costing is now not there in the syllabus, right? I think this was there in the earlier part. They have just kept it like that in the new syllabus material also. Contract costing is an extension of job costing, a specialized version. Now, why do we have this? Because some companies like L&T and all, these guys take a lot of time, more than 1 year to complete a project, correct? Example, Chennai Metro Rail project, L&T has undertaken a major portion of it. Now, it will take 5 years for them to complete this project. But tell me, guys, can they wait for 5 years to recognize their revenue, right, and book their profit? So will they prepare P&L account once in 5 years only? No. So which means these are generally types of jobs that are undertaken which take more than 1 year to complete, and the size is very big. That's why we have a specialized version of costing there, a specialized version of job costing there called as contract costing. So the main point of distinction between job and contract is because it takes, the length of time is more, the value, the job itself is big, and the activities are generally done outside the factory area. Can they do the metro rail project in their factory and bring it? Obviously not. At the site only they need to do all the digging and all these things. So all of the above. Clear with this, guys? It is not there as a part of your syllabus, contract costing, but still this is what it is. Clear with this, guys? Next. EBQ is that size of batch of production where average cost is minimum, setup cost is minimum, carrying cost is minimum, both B and C. It is a point where your setup and carrying costs are kept at minimum. Clear with this? Both B and C. So D is your final answer. Are you clear with this, guys? Right? Look at the power of conceptual learning. This is all it is. This is all it is. So now I'll just go to walk you through the theory as well. So you have the theory here. Okay. Yes, just one question was asked here. Okay, guys, now you go to the previous one and now you tell me difference between job and batch costing, right? So in job costing, for non-standard, non-repetitive products you use, here if you see homogeneous products produced in a continuous production flow in lots. That is, I told you, uniform products, similar products, but with a frequent change in variety. I told you, you remember, here cost is determined for each job. Here what do? I calculate the cost for every batch and inside the batch I will average out. Clear with this, guys? Printing press example. Jobs are different from each other, independent. The products produced in a batch are homogeneous. Clear with this? But the batches are slightly different. Are you clear with this? Now you are able to understand all these things, guys? Yes, yes. Now similarly here, state how EBQ is determined. Now, this is like one recipe. So take a cup of milk, pour it in your bowl, then you should turn on the gas, make sure that the gas is filled, all these things step by step you just need to write, that's all. Right, in the batch costing, most important part is this, arrive at the setup cost, basically guys, root of 2 ds upon c. So there is one particular batch size for which both the setup cost and carrying costs are minimum. This is known as your economic batch quantity. You just write this formula, tell them how you arrive at these figures, and then you just explain it. That's all theoretically. I don't know whether they will ask like this and all. Instead, they could ask a question. Clear with this, guys? So with this entire chapter has been completed in all the aspects, numerical problems, MCQs, as well as the theoretical part. Clear with this, guys? That's about it. So please take the MCQ section. First, idle time is the time under which full wages are paid to workers, no productivity is given by workers, both A and B, and none of the above. So the option is C, that is both A and B. That is, idle time means what? Do they work? No. So no productivity is there, right? So even in their house they go and sleep. Can I call that as idle time? No. In the office if they come and sleep, that is only called as idle time. Why? Because I am paying them for that, but I do not derive any benefit. Benefit lost. Correct. Are you clear with this? Yes, that is called as idle time. So both A and B. Logical. Right? Even without doing this treatment of losses and all, you will know this. In treatment of losses, we'll be knowing the accounting treatment, the costing treatment for that, but idle time meaning and all we know. Right? Next. The cost of idle time due to non-availability of raw material. The cost of idle time due to non-availability of raw material is charged to overheads, respective jobs, costing P&L, none of the above. Okay, right. Again, here it's about the treatment. It's about the treatment, right? The correct answer is it is charged to costing and P&L account, right? You just mark it as C. Logic we will see later. Okay. For the time being, you just mark it as C because this comes in treatment of losses, which we'll be doing. Next, time and motion study is conducted by which department? Okay, right. See, there are some theories in this chapter, that is theoretical areas in this chapter. Now, if you see, there's something called as time and motion study. What do you mean by this? What do you mean by this? I'm not sure if I have told this example to you all. Now, Maruti actually did one they did one research and they found out, in Maruti Suzuki, it's basically a car manufacturing company, right? So they will be having an assembly line. Okay. So in this line, there will be one product, right? And it keeps on moving. There will be a belt. Have you seen in airports and all, there will be this conveyor belt, no? Right? On that suitcase will be that keeps on moving, something like that. It will move at a slow pace. So what needs to be done is, right, worker A is there. By the time this product comes here, he will start working, okay, and he will just walk along with it slowly, right, and by the time it reaches here, his job, his work should be over. And from here, the next person will take over and he will start his work. Clear with this, right? This was how it was working. Now, what happened was, let us say a worker was standing here, okay? And from here to here, he was given 120 seconds time. Let us say, right? 120, just like how I am giving you the timer and all, which you guys are conveniently ignoring, right? So like that, they are also given some time. Now, what happens was, who fixes this 120 seconds? Standard time, right? They budget and they do all these things. Now, they did one research and they found out that, look, time is money actually. You know, every extra minute or every extra second that you are spending in a factory, it costs some money for the company. Now, what happened? They tried to figure out why this 120 seconds is being incurred. Why should I need 120 seconds for this worker? They came to know that there is one cupboard here, right, which has all the tools, spanners and all required. Now, every time this comes in, the product comes in, this guy has to go here and he needs to take some tool, come back and start the work, right? For that, it takes some extra 10 seconds, right? Just like how I tell you, no, in classroom, 1.7 minutes per mark and all I tell you, like that they did one calculation. And then they found out that this guy has to walk here, pick it up and come back and start the work. For that, extra 10 seconds is required. Example, I'm giving a very, arbitrary figure here. I'm not giving the exact figures because I don't know, right? Now, they are saying that if we can avoid this motion means what? Movement. They did a motion study, right? Who did this? Inside every factory, there will be something called as an engineering team. That engineering team, engineering is not just about how machines work. You are going to engineer something means what? Coming up with a creativity is called engineering. I engineer my efforts towards achieving something, right? So they do all these things and they found out that instead of having the shelf, like the shelf is a big shelf, so all the workers will be accessing that. Let's remove the shelf. What do? Let's give these workers a jacket. In the jacket, if he opens like this, all his tools will be there. He can take and he can give it. He can use it whenever he wants and he put it, right? This saves 10 seconds of time. It saved 10 seconds of time. So accordingly, they reduced the standard hours per unit, standard time per unit, of one particular laborer in this example to, let us say, 110 seconds, right? Now, this was one small thing they did. You know how much they saved because of this? They saved about 600 crores or something like that. Overall in a year, for a very small study that they did, they saved about 600 crores because of a very, very small thing. This is the impact of your, cost. They call it as, all this cost reduction policies or cost saving policies and all. This was done by using something called as motion study and time study. Clear with this? And who does this? The engineering department of a factory. Are you clear with this, guys? Are you clear with this? This is a real life case study. I'm not making this up. Figures and all, I don't know. That's why I gave you an understandable manner. 120 seconds, 10 seconds and all. I just gave you so that you can understand. But really this happened and that company ended up saving crores and crores of money, right? And what is saved is equal to gained. What is gained? Correct. Saving is equal to earning, right? That's what they have done. Look at the amount that they have saved. Small thing they have just done it. Simple study. And how do you think they did that? Using AVC, activity based costing. Because first they figured out what was the cost driver, right? Here the cost driver was he had to spend his time. So time is the cost driver. They immediately thought of ways to attack the cost driver. They gave him a jacket which reduces the time. That's how they arrived at it. See how the chapters are interlinked, right? This is a real life case study which Maruti Udyog has, achieved, and they saved a lot of money on this. And this was done by. So now you tell me, will it be done by the regular team, payroll department, personnel department, timekeeping? These guys are doing their everyday jobs. This is done by the engineering team. Engineering team, what they do, they design the product, right? And they arrive at the ways in which the product can be manufactured. They keep looking for innovations and all. Clear with this, guys? Yes, are you clear with this? So the time and motion study is being done by the engineering department. Clear with this? Will you forget it, guys? No. Right. Next. Identify which one of the following does not account for increasing the labor productivity. Which one of the following does not increases labor productivity? Tell me, guys. Which of the following does not increase labor productivity? High labor turnover. What are you thinking? What is it? What are you thinking? Yes, high labor turnover, no? Job satisfaction decreases productivity. No. Job satisfaction increases productivity. Yes, motivating workers increases productivity. Supervision and control, if you have that, also increases. Right? The only odd one out is high labor turnover. No? Right? For this, you're thinking so much. What is it? Right? Then next, fifth, labor turnover is measured by number of persons replaced divided by average number of workers. Option A. Option B, number of persons separated by number of workers at the beginning. In the denominator, what do you have? You always have only average. So here you have, so in option B, you have only beginning. So definitely it's not option B. Option C, the denominator you have what? Beginning plus end, right? It is not average. It is the total, right? So this is also not the answer. None of the above is not the case. So obviously they have given replacement method, right? This is one question they have asked, right? So it is 5A. Guys, clear with this, guys? Next, time booking refers to a method wherein an employee, of an employee is recorded. That is, dash of an employee is recorded. Now, guys, understand there are two things: time keeping and time booking, right? What do you mean by time keeping? An employee comes in the morning at 10 a.m. He leaves the company at factory at 5 p.m. Right? Entry and exit time. It gets captured under time keeping. Are you clear with this? So time keeping tells you in a factory how many hours the worker has spent. Clear with this, guys? Clear with this, guys? Whereas time booking tells you in a day he has spent how much? 8 hours, 7 hours are here. 10 to 5 is 7. Right? He has spent 7 hours. Out of the 7 hours, 3 hours he spent in job A. Right? 2 hours he spent in job B. And 1 hour he spent in lunch. Right? Where all he spent the time is being captured under time booking. Clear with this? Based on this only, you will record your journal entries and all. From the wages control account, you will take it to your respective job account or respective WIP ledgers or to your abnormal item. How will you take it? Only based on time booking. Based on time keeping, you will pay the overall wages. In a factory, I have spent so many hours. Right? Where I have spent is getting captured under time booking. Clear with this, guys? So now you tell me, time booking refers to a method wherein dash of an employee is recorded. Which of the following? Attendance or food expenses, health status, or time spent on a particular job? Which of the following? Which of the following? Now, obviously not these two. The only thing that can confuse between is, you can get confused, is attendance and time spent. Attendance tracking is time keeping, right? Time booking is, I need to book it to jobs, no? So it is only job wise collection of your hours. Are you clear with this, guys? Are you all able to follow this? Yes. Next, employee cost includes all of the above. Anything that you pay for the benefit of employee. So wages, salaries, allowance, incentives, payment for overtime, everything. Now, we have done this before. If the time saved is less than 50% of the standard time allowed, then the wages under row 1 and wages under Halsey premium on comparison gives the following. Now tell me, guys, which will give more, which will give less? So First you tell me, I'll say what he says, 50% of time saved into time rate. What does Rowan say? Time taken by time allowed into time saved into time rate. Now what they have given, if the time saved is 50% of the standard time, right? If time saved is 50% of standard time, time saved they have given, huh? Yes. So if time saved is 50% is less than 50%, sorry, if time saved is less than 50% of the standard time, it means what? If the time saved is less than 50%, then it means what? The time taken is more than 50%. Correct, guys? Right? Are you clear with this? Right? If my time saved is less than, so time allowed minus time taken is equal to time saved, right? So if my time saved is less than 50%, why is it so? Because my time taken was more than 50%, right? Guys, are you clear with this? Are you clear with this? So if my time taken is more than 50%, if my time taken is more than 50%, then tell me, will Rowan give higher or Halsey give higher? What Halsey will give higher? The time taken by time allowed is more than 50%, boss. My time taken is more than 50%. 50% means what? 50% on time allowed, no? They themselves have directly given time taken by time allowed is greater than 50%. You tell me which will give higher? You are not able to understand. Rowan says, what is the formula?
Sir, but maximum bonus given. I'll say is what?
1 minute. That is the effective hourly rate. I do get it. Yes. What I am saying is here, what they are saying is, look at this. If the time saved is less than 50% of the standard time, then the wages under row 1 and Halsey premium, which will give higher. They are not saying the bonus. They are saying the wages, which means there your time taken will be high, no? Right? So time taken into time rate, that is the basic wage, right? Over and above that, you will be paid bonus. Are you clear with this? In an absolute figure, obviously row 1 will be high. Yes, you are right. The maximum bonus at any given point of time will only be 50%, right? And that is always being paid by this guy called Halsey. Yes, I am not denying it. Here they are saying who gets the total in wages, not effective hourly, or they are not saying bonus amount. Overall in wages. Are you clear with this? Are you clear with this? So in this case, what happens if my time saved is less than 50%? It means I'm taking more time, right? Since I'm taking more time, which means that my basic wages will be more. Clear with this, guys? See how they have twisted and asked this, right? So in this case, it's going to be 8A. Are you clear with this? More wages to worker under Rowan than Halsey. Clear with this, guys? Yes, a very good sum. A very, very tricky one, in fact. Please mark this. Next. The standard time of a job is 60 hours. Guaranteed time rate is 0.3 per hour. What is the amount of wages under row 1 if the job is completed in 48 hours? Yes, time allowed is how much? 60. Time taken? 48. Time saved? 12. So what are they asking? What is the amount of wages, right? So first, time taken into time rate. How much is it? 48 into 0.30, right? How much is this? 14.4, right? Now, apart from this, you have what? So, row 1, how will you calculate? Time taken by time allowed into time saved into time rate. So, 48 upon 60 into 12 into 0.3. How much is that? How much is that? 2.88, right? So, how much comes out to? 17.28. So 17.28 is the answer. Clear with this, guys, right? They can also ask questions like this. Done? Any issues here? No. Shall we go to the next one? Okay. Important factors for control of employee cost. How do you control your employee cost? Time and motion study. Just see if it is logical. Yes. Control over idle time and overtime. Yes. Control over employee turnover. Yes. Obviously, all of the above. right? Next. Out of the following methods, attendance is marked by recognizing an employee based on physical and behavioral traits. Right now, guys, look at this. Now, attendance. If you are coming and entering or exiting the office, I can maintain a manual attendance register, right? Or I can have this punch card attendance, right? So they will be given a card. The card, if they just give it like it is an access card, if they click near the door, it will scan and only then the door will open. Or have you seen biometric attendance, right? Where you need to keep your fingerprint and all, right? So now you tell me, out of the following methods, attendance is marked by recognizing an employee based on his physical and behavioral traits. Which of the following? Biometric, that will be his physical and behavioral traits. Correct? No? Logically, you think that's about it, right? These are some theory areas given there, but logically it can be answered. Fine, guys, right? Next, if overtime is required for meeting urgent orders, urgent order means what? Customer specific request. It should be charged as respective job, overhead cost, costing P&L, none of the above. Tell me. Respective job, as simple as that. See how logically they are asking all these things. Clear with this? Fine. That's about it. Now let's move to the theory section. Guys, theory, not much of value addition I can bring you. So a lot of things that you will just have to give it a quick shot, give it a quick read, that will do. But this chapter thoroughly we have finished from a practical viewpoint. Okay, look at this. Discuss the remedial steps to be taken to minimize labor turnover, right? So labor turnover means what? Frequent or churning in my workforce. Now, first they are saying exit interview, meaning what? What do you mean by an exit interview? When they are exiting, that is when a person says he wants to leave, good companies, they do an exit interview. Means what? When they are leaving, they will say, okay, fine, but tell me the reason. We want to know where we can improve, right? So exit interview is not for hiring. It's when the employee is leaving, they will like to know the feedback. He might say, look, my boss is a person who is troubling me, or I didn't find this good in your company. They might say all the reasons, or they might not say, whatever it is. But keeping an exit interview is a good practice. Big companies generally follow it, right? Even if you see Big Fours also have the habit of an exit interview, right? Next, job analysis and evaluation, right? That is, every job, what is the requirement? We need to find out. Based on that, you need to put the right man on the right job. Else, if he does a boring job, then he will not stick with you forever, right? Then, organization should make a scientific system of recruitment, placement, and promotion for employees. Yes, you need to obviously have a very scientific system for recruitment, that is hiring the people, putting them on the right job, and promoting them at the right interval. Else, they will not stay along with you, right? So, all theory areas only. An organization should create a healthy atmosphere, providing education, medical, housing facilities for the worker. Committee for settling workers' grievance. So if they have a grievance, then you should be having a separate committee to solve all these things. Just give it a reading once and finish it off. Clear with this, guys, right? So how would you account for idle capacity costs in your cost accounting? This is basically your, I think this is idle capacity cost due to, okay, this is supplementary overhead rate. Okay, I think they have asked about your idle capacity cost. This is ideally a part of your overheads. Look, if the idle capacity is due to unavoidable reasons, supplementary overhead rate may be used to recover the idle. This is not idle time. Idle capacity means basically I am not able to recover my full overheads, right? Are you clear with this? I am not able to recover my full overheads. In that case, it's called as an under absorption. Right? Under absorption, I can account it for normal, abnormal reasons and all. Right? Normal reasons. Your basically unavoidable means what? Anyways, whatever you do, it will be there. Unavoidable does not mean that, this is, what do you call that? It is not your, Abnormal. Unavoidable is not abnormal. Unavoidable means it cannot be avoided. By nature, it has. It is inherent in the process. In that case, supplementary rate, split it off. I don't know why they have kept it here. I think our data entry person has kept it here. I think by mistake. If it is due to avoidable reasons, faulty planning, etc., take it your costing P&L. Right? Due to trade depression and all, again, it's an abnormal reason. Take it to costing P&L. Right? If it is due to seasonal factors, then what you need to do, that is price level changes and all. Remember, I told you, right? So again, what you can do is charge the production by inflating the overhead rate. That is what is your supplementary rate only. They have just made it into 4 and they have asked it. That's all. Clear with this, guys? Basically, this is overhead chapter. Please mark it as overhead chapter. It's not at all pertaining to labor. Right? Then, treatment of overtime in the following situations. Now, directly I'll go to the situation. Overtime. SV & Co. wants to grab some special orders. Yes, special orders. Overtime. What should you do it? So, it should be charged to the particular job. Are you clear with this? Our department, whatever it is. Then, it has to work overtime to make up for a shortfall in production due to some fault of management in department Y. What will you do? What will you do? So, in this case, they have clearly given for one department's fault, right? If my department is department X, it is made to work overtime, right? For the fault of department Y. See what they are saying. If overtime is worked in department due to the fault of another department, the overtime premium should be charged to that other department Y and leave it there. Here they are just leaving it like this. But ideally what happens, if it is because of any abnormalities, it needs to be taken to your, it should be your period cost, correct? Abnormalities generally, this is an abnormal item, correct? For some inefficiency, right? Clear with this? But here they have just mentioned it. They have just said, what should department X do? Throw the ball to department Y and punish it on it. That's all. Clear with this, right? S Limited has to work overtime regularly due to worker shortage. What will you do? It should be charged as employee cost as an, and it should be charged at an effective average wage rate. That is, all my job should be taken, should take this hit. Due to flood in Orissa, overtime, what is it? Take it to costing P&L. A customer requested company to expedite means quickly finish the job because of its urgency. What will you do? It should be charged the job or the customer directly. Are you clear with this, guys? See, these kind of sums, they can call it as theory and test you for 5 marks. Look, 5 marks, 5 different treatment you told. Everything is overtime related, right? You can't call it as theory, or you can't call it as a fully numerical problem also. It's a practical theory. Clear with this, guys, right? So with this, we have covered all the questions as well as the theory and the MCQs. First, the type of process loss that should not, read it carefully, guys. Don't jump to a conclusion. Read, understand, process, and then write. The type of process loss that should not be allowed to affect the cost of good units is what? Abnormal, normal, seasonal, standard. What is it? What is it? Abnormal loss. Correct. Yes, because normal loss affects the per unit cost of expected good units. Normal loss should not affect. Abnormal loss should not affect. That's why it's valued separately and taken. Are you clear with this? Very good. Very good. Next, second. 200 units were introduced in a process in which 20 units is a normal loss. If the actual output is 150 units, then there is no abnormal loss, no abnormal gain. Abnormal loss is 30, abnormal gain is 30. What is the scenario? Quick. What is the big deal? Abnormal loss is 30. How did you get this? 200 units, right? Yes, you can do it in 2 ways. I was expecting a loss of how much? 20 units, right? But what was the actual loss? 200 minus 150. I got a loss of 50, which means 30 more I got actual loss. Or in other words, 200 I inputted, 20 I expected to lose. So my expected good unit was how much? 180. But my actual good output was only 150. The difference between that is 30 abnormal loss. Clear with this, guys? Right? Are you all clear with this? That's all. Next, 100 units are processed at a total cost of 160 rupees. The normal loss is 10% and the scrap units are sold at rupees 0.25 each. If the output is 80 units, then the value of abnormal loss is how much? Come on, calculate and tell me. Take a minute time max, calculate and tell me. It's okay. Put your pen or pencil, whatever it is, on the book and write down. It's okay, no problem. Tell me the answer. Done? They've asked you to value the abnormal loss, that's all. Tell me what is abnormal loss value. A, B, C, D. Why is it taking so long? It's fairly simple is what I thought. D, 17.75. 17.75. Sure. Looking at your faces, I don't think you got the answer. You got something as 1 point something, correct? So 7 something. So you said either C or D. Inky Pinky Ponky, and you chose D. I can clearly see that. Total cost, simple guys. Cost per unit of output is what? Total loss, total cost minus normal loss scrap income. Normal loss scrap income is how much?
10 into 2.25.
So 10 units, 10% on 100. 10 is a normal loss. Every unit has a scrap income of 0.25. 10 into 0.25 is 2.5 minus 2.5 divided by input minus normal loss. 100 minus 10, 90. How much is that? What is the cost per expected good unit? How much is it? 1.75 is what? What is this? Cost per expected good units. What have they asked? Read the question. Value of abnormal loss. Right? What is the actual loss here? So I have inputted 100. I've got an actual loss of. So I have inputted 100. I have got an output of 80, which means actual loss is 20. Out of this, normal loss is 10. Abnormal loss is 10 only. No, what? I don't know why you are still suffering here. Right? So 10 into 1.5 is 17.5. C is the answer. Guys, what is the big deal, guys? We have finished this chapter and still you are struggling here. Have I not taught you properly? Right? Then what is the issue, guys? I don't know beyond this what I can do. Right? This is a very simple thing, a basic thing. Why do you hurry up? I gave you time also. Right. The next one. The next one. Fourth. When average method is used in process costing, the opening inventory costs are. What do? Subtracted from new cost, added, kept separate, averaged with other costs. I know that's because average method. No. What are they done? What do you do? Think and answer, guys. We have done it. Practically, we have done it. Huh? We have to add it with new cost. Why?
Cost, opening cost plus current year cost.
So we will consider both the prior period cost and current period cost. I know generally students will say D because average method, averaged out. This is not a BCom exam, madam. This is not a BCom exam, sir. No. It is added. Step 2. Statement of apportionment of cost. What is the template? Particulars. Then cost, you will be having 3 columns. Prior period costs, that is previous period cost, current period cost, added total cost. Yes. Both the costs will only be considered. That is what they have asked here. Guys, clear with this. That is what they have. When average method is used in process costing, the opening inventory costs are what? They are added. They are not averaged. They are added. And finally, all this amount is only evenly apportioned between the equivalent units. That equivalent units is also what? Equivalent units produced by consuming both the previous period and the current period resources. Guys, we have done this completely in and out. Right. Then question number 5. Read it carefully. That's all. You guys are not having that, little bit of carelessness you're having. Please be focused here. You will get it. That's all. You know everything. Because of carelessness, you can't afford. 6 months is no joke. You have taken all these efforts. That's why I keep telling you guys are very, very sincere. Right? Not many people take this level of efforts that you guys are taking. Right? Attending this session every day properly in a structured manner is no joke. But you have done everything, but that little extra you are losing. There is no point in doing this much efforts. Rather, I would say don't take this efforts only. Right? It's better not to do anything than to do so much and miss out on the final level. No, that's not the point. Be careful. Read it. You have time. You have time. Take 60 solid seconds. Don't jump to an answer. I'm giving you the time. Right? Next, spoilage that occurs under inefficient operating conditions and is ordinarily controllable is called as normal spoilage, abnormal spoilage, normal defectives, none of the above. Read and tell me, what do you call this?
Normal spoilage.
Abnormal spoilage or normal spoilage? Abnormal. Why?
Control of ordinary.
It is inefficient. That is what? It was not expected, right? Which means what? It could have been controlled, right? But I didn't do it because of my inefficiency. So it's an abnormal loss, spoilage only. Clear with this, guys. Next. The cost of normal loss is ABCD, which is the right one. Absorbed by good units produced, and the amount realized by sale of lost units should be debited to the process account. Or B, debited to costing P&L account. Is B correct? The cost of normal loss should be debited to costing P&L. Correct? Think and answer. Yes or no? No, definitely not. It is not even valued separately. Right? Then absorbed by good units produced. This is one thing they have said. Right? And then first one, is it correct? Absorbed by good units produced, and the amount realized by sale of lost units should be debited to process account. Is this correct? Exactly. This is everything is correct, but this alone is wrong. It should not be debited, right? So this is also not the answer. Absorbed by good units produced. Okay, this could be an answer. Let us see. Debited to costing. No, this is not the case. So answer is C. Clear with this, guys, right? Students will mistake and write down A. Reason, this is not debited. Had they given credited, I would have picked answer A, right? Deliberately they have hidden it in this word. Guys, clear with this. Watch out for these things. It might sound very lame, but 1 mark, guys, 1 mark, just because your concentration, your focus got slipped, you losing 1 mark. Just imagine, it might be 1 mark, but like that, it can just add up and it can become a big number. So I don't want you guys to lose out on your attempt because of your carelessness. Definitely not. The level of sincerity and efforts that you guys are putting should pay off. It should not be overtaken by the carelessness and all these things. Right? Fine, guys. Next, question number 7. The value of abnormal loss is equal to ABCD. So total cost of material, the process cost less realizable value of normal loss, total process cost less cost of scrap, total process cost less realizable value of normal loss, less value of transferred out goods. A, B, C, D, which is the right answer. If you want to visualize, put that process account and see, that's all. Option D. Yes, obviously, because if this is a process account, total process cost, right, minus normal loss scrap income, right, minus units transferred to a next process, right, whatever is the balancing figure is only your abnormal loss. You can say they have not given anything about closing WIP. If that is there, that should also be reduced. Clear with this, right? Out of the 4 options, this is the best option. So abnormal loss is not only the cost of material. Process cost less the realizable value. No, that is the total value of, that is the net total expected cost. Yes, then total process cost less cost of scrap. No, right? Then total process cost less realizable value of normal loss less the value of transferred out goods. Clear with this? Only D is correct. Guys, clear with this? Read it carefully before you answer. Next, 8. Inter-process profit is calculated because a process is a cost center. Each process has to report profit. The efficiency of a process is measured. The wages of employees are linked to process profitability. A, B, C, D. Which of the following? Very good. C. The efficiency of the process is measured. I told you it's a measure of performance evaluation. Clear with this, right? And hence I convert a cost center into profit center. All cost centers need not be converted into profit center. For the purpose of calculating the efficiency only I do it. Are you clear with this, guys? Yes? So now tell me, without all that background, you could not have answered this. Right. Next, under weighted average method, the cost to complete the opening WIP is ignored. The cost to complete the opening WIP and other completed units are calculated separately. The cost of opening WIP and the cost of current period costs are aggregated, and the aggregated cost is divided by output in terms of completed units. Closing stock of WIP is valued at current cost. A, B, C, D. Which one is correct? Read and answer.
C.
How, which is correct? Yes, it is C. When you're doing the weighted average method, in step 2, what will you do? Previous period cost, value of opening WIP plus the current period cost, everything you added. Cost of opening WIP, that is previous period cost, and the current period cost are aggregated. Aggregated means what? Added. And the aggregated cost is divided by the output in terms of equivalent units, completed units. Yes, this is what we do, right? We ignore the opening WIP. No, that is ignored only if we are following FIFO. Why we ignore it? Because it need not be apportioned. It will entirely enter into my units completed and transferred, right? Cost to completed units, cost to complete the opening WIP and other completed units are calculated separately. No, this also again is done only in FIFO method, right? Closing stock of WIP is valued at current cost. This is also done only in FIFO method. Why? Because the opening WIP will fully enter into my units completed and transferred. So obviously my closing stock will only be valued at full current period cost only. This is the only thing that is applicable for weighted average. Guys, clear with this, guys? Yes. Next, a process account is debited by abnormal gain. The value is determined as follows. A, B, C, D. Quickly read and tell me. The value of abnormal gain is equal to the value of abnormal loss. Correct? Guys, the value of abnormal gain is equal to value of abnormal loss. Correct?
No, sir.
No. Very good. The cost of good units less the realizable value of normal loss, or the cost of good units less realizable value of actual loss equal to the value of good units less closing stock. Okay, A is definitely not the case. B, C, D. Among these three, which one?
C is also not.
C is also not. Why?
Actual.
Yes, we will not take the realizable value of actual loss anywhere in the process account. Why? Because the realizable value of abnormal loss units will only hit your abnormal loss account, and in that pain there is a gain net off only. I'll take it to my costing P&L account. Fine, very good. You tell me, is it equal to the value of good units less closing stock?
Yes, sir. Value of good unit plus
Normal loss.
B.
B, sir.
B. That is, a process account is debited by the abnormal gain. The value is determined by the cost of good units less realizable value of normal loss. Obviously, you know, right? How will you value it? Total cost minus normal loss, scrap income. This was what they are asking here. Numerator calculation they are asking. Guys, clear? Right? Divided by expected good units, input minus normal loss units. That is fine. They are asking what is the value you use to value this. Right? It is the total cost, cost of good units. Yes. Less the realizable value of normal loss. Ideally, it has to be total units. It should not just be good units, total units. Okay, right? Fine, guys. Fine, guys. Okay, yes, it can be good units. Yes, it can be good units. Yes, it can be good units. Because if you have an abnormal gain, right? If you have an abnormal gain, so generally all the units are good units only, no? except for the normal loss units. So that's why they have given it. Of the lot, this 4 is, this B is only correct. Clear with this, guys? They have asked you for the value here. Are you clear with this? Done, guys. Shall we move to the next one? Lean Labs develops a 55 film using a 4-step process that moves progressively through 4 departments. The company specializes in overnight services and has the largest drugstore chain as its primary customer. Currently, direct labor, direct materials, and overheads are accumulated by departments. The cost accumulation system that best describes the system Lean Labs is using is operation costing, activity costing, job order costing, process costing. Which of the 4? Yes, process costing, because that is the name of this chapter. It could be operation also, no? Why is it not operation? Why is it not operation costing?
Because
They have multiple products.
It is not multiple product. They develop only a 55 film, right? And it passes through multiple processes. It's a process costing. ABC job order and all is not there here. Clear with this? Next, when compared with normal spoilage, abnormal spoilage, ABCD, which one is the right sentence? Abnormal spoilage arises more frequently from the factors that are inherent in the manufacturing process. Is it so? Abnormal loss, will it happen because of the inherent process? Is it unavoidable? No, it is avoidable. It is not because of inherent parameters. Definitely first is not the case. Then abnormal spoilage, right, is given the same accounting treatment as normal spoilage. Is it correct? Absolutely not. For accounting treatment only, we segregate it and make it as 2 different losses. Now, abnormal spoilage is generally thought to be more controllable by the purchase department than the production department. Is it so? Is it so? Only the purchase department can control abnormal spoilage, is it? No, the production happens here. At the time of production also abnormal spoilage can happen. This is also not the case. Fine, so obviously D is the answer. What is D? We will see. Fine, so what is D? Is not typically influenced by the tightness of production standards. It is not influenced by anything. Clear with this? Basically, tightness of production standards mean what? For 1 unit, you can only take a maximum of 5 hours, I am saying, right? So that employee is inefficient, right? Or he is efficient, right? Whatever it is, this standard does not impact my abnormal loss. The abnormal loss is not happening because of the inherent feature, right? It happens because of some inefficiency. Suddenly there is a breakdown, right? Or I have put my raw material into the production facility, but in between there was some issue with the production facility. It didn't come out well. For example, right, Xerox machine I have, right? I put this paper, good paper, no, right? So when it came out, right, out of 100 units, 20 papers came out in a crushed manner, right? Printing happened, but it came out in a crushed manner. Can I use that? Absolutely not. So now it's because of some inefficiency. I cannot blame it on the standards and all. Are you clear with this? That is what they are saying. Tightness of standards means what? They are fixing a very strong budget. They are saying for 1 unit you are allowed to take only 5 hours, or for 1 unit you are allowed to take only 4 hours and all. That will not impact your abnormal loss. Maybe you can consider that in a normal loss. Okay, so generally they find it difficult to do it within this time. So I know that, okay, it can lapse to this extent. Since I'm asking them to finish it with before time itself, they could compromise in the quality. So it could be that it is expected. That is not a reason for an unexpected spoilage. Clear with this, guys? Right. Next. Assume 550 units were worked on during a period in which a total 500 good units were completed, right? So 550 was the input, right? 500 was the good output. Normal spoilage consisted of 30 units. Abnormal spoilage is 20 units. The total production costs were 2200. The company accounts for abnormal spoilage separately on the income statement as loss due to abnormal spoilage. The normal spoilage is not accounted for separately. What is the cost of the good units produced? Come on, guys, you tell me, what is it? The cost of good units produced. How much is it? Treatment of losses question. This is not even a process costing question. Treatment of losses question. Calculate. Calculate. ABCD. ABCD. Which is it? B. Right? How did you get it?
2200 divided by
So 2200.
5. divided by
total cost minus normal loss scrap income divided by input quantity 550 minus normal loss 30, that is 520, right? How much is that?
2115.
No, but this is 2200 divided by 520. How much you get? 4.23 something something something, right? So now how many good units I've got? This is the cost per our unit of output into 500. How much you get? 2115.38461538 something. So this is the answer. Clear with this, guys, right? Treatment of losses. If I directly do process costing, you will not be able to answer this. Now this is all I've picked it from the study material only. You yourself tell me it is there in the study material, but treatment of losses is not separately there. Right? Then how will you be able to do it? That's why we did it in that sequence. Clear with this. Next, IC Limited uses process costing systems and inspects its goods post manufacturing. An engineer noticed on May 31st the following: good units completed 15,000, normal spoilage 300, and abnormal spoilage was 100. The unit cost were material 2.5, conversion cost, labor and overheads 6 rupees. The number of units that the company would transfer to its finished stock and the related costs of these units are A, B, C, D. They are asking you to find out the value of units completed and transferred, the number of units and the value of that. Quickly do and tell me how much is it. Come on, carefully read it and you tell me. Please don't look at the answers and all. Do it by yourself. Even if you look at the answers, I don't mind. I will definitely ask you for the logic. Right? Do it, do it, do it. Come on, take a minute time. Do it. Yes. So tell me, what are they asking? What are they asking? They are asking you to calculate the number of units completed and transferred to FG stock along with its value. Yes, so tell me, what is it? What is it? How much? A, B, C, D, which one? Or what is the value? How many units? First you tell me, how many units got transferred? Huh? 15,000 units only? Very good. 15,000 units only. So it's definitely not D. Okay. What is the value you get?
1,30,000,
1,30,000 0 3 3. Excellent. Very good. Very good. That is the right answer. But they have rounded it off here and made it as 1,30,050. Now, how did you get it?
they have given the credit side completed and transferred 15,000.
Simple. They have given the credit side items, that is units completed and transferred, normal loss units, abnormal loss units, which means the total input would have been how much? 15,400, right? So I inputted 15,400, right? I inputted total of 15,400, that is represented by these three.
Yes.
Guys, clear with this? Right? Right? So I had originally processed how many units? 15,400 units, right? The cost per unit is how much? 2.5 plus 6, 8.5 rupees, right? So 8.5 into 15,400. What is the total cost?
1 lakh
How much is that? 1,30,900. Guys, clear with this. Minus normal loss, scrap income is not there. Divided by input quantity. How much was the input quantity? 15,400 minus normal loss units. I know that I will lose how many units? 300 units. So technically, the cost per expected good unit is how much? 1,30,900 divided by 15,100. So divided by 15,100. How much is that? 8.668874 something, right? So that is the cost per expected good unit. What is the value of 15,000 units? Into 15,000 units, you get how much? 1,30,033.11 something. I think they have rounded it off. I think they have put it as 8.67 into 15,000. If I'm not wrong, 17. Look, that is what they have done. They have rounded it off. 8.67 into 15,000. They have done it. They have rounded it off. Clear with this, guys. So if you're getting this answer, definitely this is the correct answer, right? Strictly speaking, please don't round off while doing the numerical problems. Why? Then your total of debit and total of credit will not tally, right? Clear with this. But for MCQs, they are doing this nearly. If it is coming, then you should logically think that they might have rounded off. Clear with this, guys. Excellent. Very good. Very good. So this is what it is. So it's answer B. Clear with this, guys. That's all it is. That's all it is. Very, very simple. Done? Right? Fine. So let's go and do some theory questions and finish it off. So what do you have here on the theory part? Not much we're having. Got it. Okay. Look at this. Explain the term equivalent units used in process industries. So what do you mean by equivalent units? Right. Basically converting all your, with different degrees of completion, you convert it into every unit fully completed. Right. So converting the incomplete production units into their equivalent completed units. That is what they have done. How do you do it? So actual number of units into the percentage of degree of completion, percentage of work completed. For instance, 25% of work has been done on an average units under process. 200 units is there. So 200 units, it will be 50% completed units. That means it will be equivalent. So 200 units, 25% complete is equivalent to 50 units, 100% complete, right? That is what they have given and all with an example. Put it in your own language. Clear with this, guys. Then, how will you treat normal loss, abnormal gain in process costing? Explain. This was a exam question, right? So what do? You just need to write it here. So normal loss, the cost of normal loss is absorbed by the good units produced. The amount realized by the sale of normal loss should be credited to the process account. That's all, right? Then abnormal loss. The cost of abnormal loss is equal to the cost of good unit, correct? Why? Because it is also an expected good unit only, turned out to be bad. Right, the total cost of abnormal process loss is credited to the process account from which it arises. The cost of abnormal process loss is not treated as a part of the cost of the product. It's a period cost, not a product cost, right? So in fact, the total cost of abnormal loss is debited to the costing P&L account. It is taken to costing P&L account through your abnormal loss account. Clear? Similarly, abnormal gain, the process account under which the abnormal gain arises is debited, right? Is debited with the abnormal gain and credited to the abnormal gain account, which will be closed by transferring it to the costing P&L account. The cost of abnormal gain is computed on the basis of normal production and all. They have just given it. Clear? Obviously, you will do it based on normal production. That is, the denominator will be what? Total input minus your normal loss units. That is basically your normal unit of production. Are you clear with this? That's about this entire chapter. Yes, guys. Right. Come on, guys. I want your active participation. Come on, let's go to the MCQs and let's do it quickly. Yes, shall we start? Shall we start? Guys, quick, shall we start? Yes. So, joined by products. Let's go to the MCQ section. in sugar manufacturing industries, molasses means what? Molasses means, you have a sugar cane, right? That sugar cane is there. Now, once you put that sugar cane inside that, that wheel type of thing, that juice will come and its waste will come out. No, that waste is nothing but the stem of that sugar cane will come out. That is called as molasses. Clear with this? It comes along with some molasses, right? It is also produced along with the sugar. Molasses may be of smaller value as compared with the value of sugar cane, and it is known as what? Molasses in this case is an example of
Byproduct.
what is it? Come on, very simple. Byproduct, as simple as that. Byproduct. Clear with this? Ancillary product. Now, am I processing sugar to get molasses? No, I want only sugar. But coincidentally, I get this, and the value might be generally smaller. Clear with this, guys? Next. Method of apportioning joint cost on the basis of output of each joint product at the point of split off is known as what method? On the basis of output.
Physical.
That's about it. Physical units method. Are you clear with this? Are you clear with this? Yes. Also, average cost method, average unit cost method also gives the same answer. But since they have used output and all, use it as physical units method. Clear with this, guys? Yes. Done. Then next, let's go to the next one. In NRV method, for apportioning the joint costs over the joint products, the basis of apportionment should be. So what method they are saying? NRV method, apportionment of joint costs on the basis of what? A, selling price per unit of each of the joint products. B, selling price multiplied by the units sold of each joint product. C, sale value of each joint products less further processing cost of individual product. D, both B and C. Which one of the following is correct?
C, sir.
Which one of the following correct? See, in NRV method for apportioning the joint cost over the joint products, the basis of apportionment, how will you do it? The basis of apportionment, how will you do it? It will be what? Look at this. They are asking you for the three options. Now here ideally NRV method will be the final sale value, right? Less the further processing cost. Correct, guys? Hello? Yes. Yes. Are you clear with this? Yes. Now, at times when they are not further processed, what will you do? You will take directly the sale price, the sale value at the split off point level itself. Guys, yes, you can take the sale value of the split off point itself, right? So for that reason, I think in the institute study material, they have given D as the answer. But ideally speaking, the answer should only be C. Clear with this? One second, I think institute has given one correction, it seems. Just a minute, one second, let me just see if they have mentioned this as a correction. Second. So institute generally releases something called as corrigendum. So in that corrigendum, this comes in. Second, guys, just a minute. Okay, they have not released anything in that. I don't think they have made this correction. Okay, one second. Right, so in the institute study material, they have given both B and C. But ideally, in my opinion, the answer should only be C. Obviously, NRV method, it is the sale value of each of the joint product less the further processing cost of the individual product. That is called as NRV itself. But they have said they can also use selling price multiplied by the units sold of each of the joint products. No, I would say you take it as C only. In the institute study material, they have given us D, but let's take it as C. Clear with this, guys, right? Now let's move to the next one. Question number 4. The main purpose of accounting of joint and byproducts is to find which of the following objectives, A, B, C, D. Calculate the opportunity cost, replacement cost, determine the profit or loss of each product line, none of the above. Which of the three is correct?
C.
Obviously, it's C. This goes on to achieve your objective, overall objective of what? Your profit calculation, your stock valuation profit computation. Yes, next. Under NRV method of apportioning the joint cost to the joint products, the selling and distribution cost. What will you do to the selling and distribution cost? Exactly. Deduct from sale value. I told you any cost incurred post your separation, post your split off point should be reduced, right? It is not just further processing cost. It could also be any marketing expenses or anything. Clear with this. Look how they have asked. I kept on telling this while doing the sums. See, they have asked it as an MCQ question here. Next, which of the following is a co-product? Co-product means what? Joint product. Clear? Which of the following is a co-product? Diesel and petrol and oil refinery, edible oil and oil cakes, curd and butter in a dairy, mustard oil and sunflower oil in an oil processing company. Now here if you see, they have given D as the answer. Now 1 minute, let me just take you to what is a co-product. Just a minute. Now look at this, what they have mentioned here. Co-products, right? Joint products and co-products are used synonymously. Synonymously means what? They have the same meaning in common parlance, but strictly speaking, a distinction can be made between the two. Co-products may be defined as two or more products which are contemporary but do not emerge necessarily from the same material in the same process. Now, if you see in our example, right, diesel and petrol necessarily have to come from the same process. Correct? Guys, yes. Edible oil and oil cake will come from the will have to come from the same process. Curd and butter obviously needs to come from the same process. Whereas mustard oil and sunflower oil can come from the same process, right? But it is not necessary that they need to be processed together only, right? Separately also, if you want, you can process. Correct? No. Maybe this company, they are doing it like this. That is the fine line of difference between joint products and co-products. Clear with this? In terms of cost accounting treatment, they are one and the same. But joint products means what? Necessarily, they have to be produced together only. From a common process, they emerge. Co-product, no, I am doing it in such a way that these two products come from a common process. Can I also do it separately? Yes. Example, mustard oil, sunflower oil. Clear with this? Mustard oil and sunflower oil can be done separately. Completely can be done separately. But what they have done, to some level processing, they are doing it together. And from a point alone, mustard oil and sunflower oil are taken separately. Is it always that inseparable? Are they inseparable? Nothing like that. They can be separated. Still the company is doing it together. This is the difference between a co-product and a joint product. Clear with this, guys? I want to do it together. I am doing it. Hence, I'm calling it as a co-product instead of a joint product. Clear with this, guys? But for all cost accounting treatment, co-product and joint product are the same. You treat it alike only. But strictly speaking, this is the line of difference. Are you clear with this, guys? If you see, these three need to necessarily be coming out from a common process, whereas here it's optional. I can also do it separately, but for convenience sake, I'm doing it together. Clear with this, guys? Are you all clear with this? Yes? Fine. Next, question number 7. Which of the following is an example of byproduct? Which of the following is an example of byproduct? Come on, A, B, C, D. Which of the following is an example of byproduct? Yes, B. Why? See, diesel and petrol, obviously they are joint products. Curd and butter, joint products. Mustard, seeds and oil, they are also joint products. Edible oil and oil cakes, right? Obviously oil cakes are, it comes as a byproduct only. I don't process it to get oil cakes. Are you clear with this? It just comes as a byproduct. So obviously of the lot, this only looks like a byproduct example. Clear with this, guys? Are you clear with this? That's about it. Logically, you can answer. That's about it. Which of the following method can be used when the joint products are of unequal quantity and used for captive consumption? Captive consumption means what? I am producing something for my own consumption. Are you clear with this? Captive consumption means I am not selling it. That product I am consuming to produce one more product. Are you clear with this? So which of the following methods can be used when the joint products are of unequal quantity and used for captive consumption? A. Technical estimates using market value. NRV method, physical units method, market value split off point. Which of the following methods? Which of the following methods? Logically think and answer. No? What is the big deal here? Logically think.
NRV method.
Why NRV method? Whatever you tell me, I am fine with it. I want the reason.
Because they have said unequal quantity.
Okay, unequal quantity. So what? Obviously, it has to be technical estimates because see, I am going to use it for my own consumption. So I am not selling it outside. How will I get the market value? Even NRV, I need to arrive at the final market value minus my further processing cost. How will I get it? Physical units method, it is definitely not a correct method because it ignores the ability to pay principle. These two require market value, which I don't have. Obviously, in this case, I have no other option but to hire one technical person and ask him to give me a valuation report. Clear with this? Logically think. That's all. It is not mentioned anywhere. You just need to logically think and answer. That's about it. Clear with this, guys? Right? Next. Which of the following methods is not correct in relation to co-products? Which of the following is not correct? Right? First, co-products may also have joint products. Correct or not? Is this correct or it is not correct? Co-products can also have joint products.
Yes, sir.
Along with co-products, I can also have joint products. So is there anything wrong here?
Yes.
Yes, there is nothing wrong. This is correct. Costing for co-products are done according to the process costing method. Obviously, this entire chapter is an extension of process costing only. Clear? This is also right only. I don't see anything wrong here. Fine. Co-products do not have any byproducts. Is it so? Whenever you have a co-product, there will not be byproduct at all. Is it so? Is it so? Is it so? Who said? No, I can have no. Co-products I can have similar to joint products. Along with this, I can also have byproduct, no? Yes, obviously this one is the wrong of the lot. Fourth one, co-products are treated as a separate cost object for costing purpose. Yes, I treat it as a separate line item, separate product only, similar to my joint products. Clear with this, guys? Are you clear with this? Yes. So obviously the answer is 9C. Next, when a byproduct does not have any realizable value, the cost of the byproduct, what do you do with respect to the cost of the byproduct? When the byproduct does not have any realizable value, the cost of the byproduct is transferred to P&L or borne by the good units or ignored or determined by taking the value of similar goods. Obviously, where is the need to think about it? It's direct. It is borne by the good units. Treatment is similar to your normal loss and all. We have done one full chapter, right? That's about it. Fine. Then SD Limited manufactures two products from a joint milling process. The two products developed are mine support MS and commercial building CB. A standard production run incurs a joint cost of 1 lakh and results in 60,000 units of MS and 90,000 units of CB. Each MS sells for rupees 200 per unit and CB sells for 450 per unit. Assuming no further processing work is done after the split off point, the amount of joint cost allocated to CB on the basis of physical quantity allocation would be how much? Guys, nothing, it's not no brainer. Tell me, how much will be the amount of joint cost apportioned to CB? 1 lakh into 90,000 divided by 1,50,000. How much is it? 1 lakh into 90 by 150.
60.
How much is that? How much is that? 60,000. As simple as that.
Option A.
Nothing great. Option A. That's about it. Guys, clear with this, guys. That's all they have asked. Next. K company manufactures two hair care lotions, Levi and Silly, whatever it is, Levi or Silly, out of a joint process. The joint costs incurred are 6,30,000 of the standard production run that generates 1,80,000 gallons of levy and 1,20,000 gallons of silly, right? So you have 1.8 lakhs and 1.2 lakhs respectively, the two products, LNS. So Levi sells the rate of rupees 240 and Silly sells with the rate of rupees 390 per gallon. If additional processing costs beyond the split off point are 140 per gallon of Levi and 90 per gallon of Silly, the amount of joint cost of each production run allocated to Levi on the basis of physical quantity is how much? So they are asking you for the share of joint cost of Levi alone. How much is that?
3,78,000.
How much is it? Come on, tell me, how much is it? Tell, no?
3,78,000.
3,78,000. Now all this further processing cost and all is not required. 6,30,000 into 1.8 lakh divided by 3 lakhs. Correct?
Yes, sir.
Right, guys? So 6,30,000 into 1.8 divided by 3. That's going to be 3,78,000. That's about it. Clear with this, guys? Yes, you guys are clear with this, and that's about it.
Yes, sir.
Fine, shall we move to the next one?
Yes, sir.
Yes. For the purpose of allocating joint cost to the joint products, the sale price at the point of sale reduced by the cost to complete after the split off is assumed to be equal to A, B, C, D. What is it? For the purpose of allocating the joint costs, the sale price at the point of sale means what? Final sale price minus further processing cost is assumed to be equal to what?
Net sale value.
Net sale value at split off point. So not all products might be having a ready market at the split off point. If they are not having, then what will we do? We will take the final sale price, final sale value minus further processing cost. We will arrive at this figure. Are you clear with this, guys? Are you clear with this? Yes, guys. Yes, you guys are able to follow this. Guys are able to follow this? Yes. And that's about this question as well. That's about this question, and that's about the MCQ sections in this area. Now let's quickly go to the okay. Yeah, 412. Okay, let's go to the questions, the theory questions. We have quite a few here. Got 7 questions here. Okay. Shall we get started? Yes, guys. Now look at this. Describe the NRV method of apportionment of joint costs, right, to the byproducts and all. NRV method of apportioning the joint cost to byproducts. So what do you mean by NRV? Look at this. They are talking about on the byproduct, right? NRV on byproduct. The realization of disposal of the byproduct may be deducted from the total cost of production so as to arrive at the cost of the main product. For example, the amount realized from sale of molasses in a sugar factory goes to reduce the cost of sugar produced in the factory. Now this net joint cost will is only getting apportioned between my joint products. Clear with this, guys? Right? So when it requires some additional processing, what will you do? You will take the final sale value minus further processing cost. The NRV amount gets adjusted, gets reduced from my joint cost. The net joint cost only gets apportioned between my joint products. Clear with this, guys? That they have just explained it here. Clear with this, guys? Are you clear with this? Yes?
Yes.
Fine. Now, how are byproducts treated in costing? We have already seen this before. If the value is so small, two options are there. One, you take the sale proceeds to P&L, or you take the sale proceeds and credit it to the process account so that it reduces the joint cost and only the net joint cost gets apportioned between the expected good units, or in other words, your joint products, right? When it is considerable in value, at times what people do is they will even treat it as a joint product itself. Example, Tiger biscuits, right? Beyond a point, it grew so well that now they might even be treating Tiger biscuit as a joint product because it is actually a byproduct, but the value that you get out of it is almost equal to the value that you get out of your main product. So they are treating it as a joint product. Clear with this, guys? Okay. And in case it requires further processing, what you need to do? So you need to take the NRV, and this NRV should be adjusted from your process cost and all. Guys, clear with this. Whatever we have learned, just put it in words. That's about it. Clear with this, guys. Fine. Let's move to the next one. How apportionment of joint cost up to the point of separation amongst the joint product using the market value at the point of separation and the NRV method is done. So they are just asking you to explain how you apportion the joint cost on the basis of market value at split off point and on the basis of NRV method. So whatever we have learnt, they have just put it in words. That's about it. Nothing great here. Clear with this, guys. Clear with this, guys. So whatever we have learnt, they have just put it here. NRV. So you should take the final sale price minus all these post split off costs, your selling and distribution costs, estimated profit margins, whatever is incurred after your split off point, reduce that to arrive at the NRV and all. So they have just asked you how to do it. Sale value at split off point, that will be given. The market value you need to find and use that as the basis for apportionment. That's about it. Once again, they have asked treatment of byproduct. I think it is repeated. Treatment of byproduct. It's the same thing. Distinguish between joint and byproducts. Right? So joint and byproducts. I don't think this is in points actually. I don't think this is in points. Look, they have just given what do you mean by a joint and byproducts. Joint products are defined as the products which are produced simultaneously from the basic raw materials by a common process. But none of the products is relatively of more importance or value as compared to the other, which means what? All the products are of equal value. Not one product is more superior to the other product. Clear with this. For example, spirit, kerosene oil, fuel oil, lubricating oil, wax, tar, and all these things are example of joint products. Byproducts, on the other hand, are the products of minor importance jointly produced along with other products of relatively more importance of value by the common process and are used and using the same basic materials. And these products remain inseparable up to the point of split off. Example, in dairy industries, the batter or cheese is the main product, but buttermilk is the byproduct. Or you can even say cow dung, that is also a byproduct, incidental. Clear with this? Points of distinction and all they have given. Joint products have almost equal economic importance, but this is not the case with byproducts. Joint products are produced in the same process, whereas byproducts are produced from a scrap or discarded materials of the main product. That is, generally what happens, byproducts, what they do is, that Tropicana example, generally for you to make your byproduct saleable in the market, you need to do some extra further processing. It is generally required because byproducts cannot be sold as such. Generally, in certain cases, yes, theoretically, but practical distinction is, they are saying always it requires some level of your further process. And joint products are not produced incidentally, but byproducts are emerging incidentally. Clear with this? Or I can say joint products are produced intentionally, whereas byproducts are produced incidentally. Clear with this, right? So that is what they have given. How apportionment of joint costs up to the point of separation among the joint products using market value at the point of separation and NRV method is done. I think this is already discussed. We discussed this before. Briefly, describe briefly how the joint cost up to the point of separation may be apportioned among the joint products under the following methods. They have asked you to explain all the methods. Average unit cost method, contribution margin method, market value at the point of separation, market value after further processing, net realizable value method. Just briefly line 2-3 points about every single point and leave it there. Clear with this, guys. Nothing great beyond this. And that's about this entire chapter. Clear with this, guys. That's about this chapter. Now this chapter I told you is ideally an extension of process costing, but it has its own intricacies. As in, main difference here is what? You have more than one type of product emerging out of a common process. In that case, how do you do? The cost accounting is what we learned in this process. And the 4 learning objectives here we saw were what? Apportionment of joint costs, the methods of apportionment of joint costs, right? Then we went on to see what? Then we went on to see treatment of byproducts, then further process or not decision, and finally, then we did process costing and joint and byproducts, and then we saw further process or not decision. Clear with this, guys? This is about the entire chapter. Now, let's get started. First question. Under marginal costs, the cost of the product includes what? That is, product cost will have what? A, B, C, D. Which one? Prime cost only, prime cost and variable overheads, prime cost and fixed cost, prime cost and factory overheads. What? Huh? A, B, C, D, which one? Obviously only B. Are you clear with this? To be more specific, I would say it is prime cost plus variable production overheads. Correct? Variable selling and admin will also not come. Clear with this, guys? Yes. Next. Reporting under marginal costing is accomplished by. So how do you report the profit under marginal costing? Number one, treating all products as period cost. Do we treat all the cost as period cost? Guys, no. No, this is not correct. Then eliminating the work in progress inventory. Who said? Do we eliminate with WIP? No, we didn't see that. By matching the variable costs against a revenue and treating all the fixed cost as period cost. This is correct. Yes, guys. Including only variable costs in income statement. Do we consider only variable cost? No. In income statement, we also consider fixed costs. We segregate and we keep both. So obviously option C is only correct. Clear with this, guys? Next, period costs are variable, fixed, prime cost, overheads. Out of the four, which is the correct answer? All fixed costs are period cost, right? I told you, no. Yes. Fixed itself means period. That's what marginal costing says, irrespective of the location. When the sales and production in units are the same, the profit under marginal costing is higher, marginal costing is lower, marginal costing is equal, none of the above. When the sales and production are the same. When sales and production are the same, what happens? Yes. So, the marginal costing profit is equal to absorption costing profit. Why? Because I have produced whatever I have sold. Correct? No? Yes, which means my opening and closing stocks are not there. Are you clear with this? Or even if there is opening stock, right? Whatever I produce, I sold, which means that will exactly be equal to closing stock. So my closing stock will exactly be equal to opening stock. Are you clear with this? If my production is equal to sale, always my opening stock will be equal to closing stock. Correct? Why? Because I had an opening stock at the beginning. This year, whatever I produced, I sold. So whatever I produced, that went out. So which means I will be left off only with whatever I had at the beginning. Are you clear with this? So when my production is equal to sale, my opening stock is equal to closing stock. And in that scenario, what will I have? I will be having a same profit reported under both marginal and absorption costing. Clear with this, guys? Next, when the sales exceed the production in units, what happens? When sales exceed the production in units, which reports more profit? A, B, C, D. Tell me. When sales is more than, when my sales is more than opening stock, production, sales, closing stock, when my sales exceed my production, what happened? Keep an example. I have an opening stock of 10 units. Production is 100. Sales, let us say, was 105 units. What will be my closing stock? Hello? 5. So which means what happens to my net stock? Net opening or net closing? Net opening, which means what? Which means what? Absorption costing? Absorption costing will have lesser or more? It has a more debit side, meaning what? Lesser profit. So marginal costing profit will be higher. Guys, are you clear? If you do not know something, put an example and see, it will come automatically. Yes. So here I have a net opening stock. Net opening stock means it is on the debit side. Always, whether opening or closing, stock is valued more under absorption costing. If there is a net opening stock, then it means the debit side is more under absorption costing. So the profit of absorption costing is less, or I can say the profit of marginal costing is more. Clear with this? Next. The main difference between marginal costing and absorption costing is regarding the treatment of what? Regarding the treatment of fixed overheads. Right. To be more specific, fixed production overheads. Next. Under the PV ratio, the term profit means what? Under the term PV ratio means what? Hello? Hello? Profit volume ratio. In this profit volume ratio, right, the word profit stands for what? Exactly, I told you it's nothing but variable profit. Guys, please answer no. In the first lecture of this chapter, I told you the reason why it's called as PV ratio and all, right? That's what they're saying. It's a misnomer. Misnomer means what? It is like misleading. This in fact refers to contribution. Are you clear with this? See how all they are asking, how conceptual it is, right? And out of the last few questions, so many questions came only from marginal versus absorption costing. You saw that? You noticed? Next, the factors which can change the break-even point, sensitivity analysis concept. Tell me, what are the factors that can change the break-even point? If my fixed cost change, will my break-even point change? Guys, yes, sir. Okay. If my variable cost change, will my break-even point change? Yes, sir. Why? If your variable cost per unit changes, contribution per unit will change. If your contribution per unit changes, obviously now it takes more or lesser time to recover your entire fixed cost. It will change. Similarly, if there is a change in selling price, again it impacts my contribution. That is PV ratio. The moment PV ratio gets impacted, break-even point also gets impacted. So what's the answer? All of the above. Are you clear with this, guys? Logically think and answer. Then, if the PV ratio is 40% of the sales, then what about the remaining 60% of the sales? The remaining 60% is variable cost ratio. That's all. See how easy it is. Then the PV ratio of a product is 0.6. The profit is 9,000. What is the margin of safety? It's going to be how much? 9,000 divided by 0.6. How much is it? Hello? 9,000 divided by 60%. 0.6. How much is it? 15,000. Are you clear with this? Are you clear with this? Fine. Let's go to the theory part. Okay, guys, right? So first, what are the limitations of marginal costing? Yes, we saw the greener side of marginal costing, but right now, in practicalities, there are some limitations. Difficulty in classifying the fixed and variable elements. In your exam, they will give you how much is fixed, how much is variable. In real life, to calculate which component is fixed, which component is variable, it's very difficult. For example, in your real life, whatever expenses you are spending every day, you take a note of it and try to classify it as fixed and variable. You will notice how difficult it is. Clear? Fine. So you will notice how difficult it is. Are you clear with this? It will happen. So in practically, it's in reality, it's difficult to classify. Dependence on key factors. So what are the key factors that I have and how do I determine them? These are also some issues that are there. Scope for low profitability. What is this? Sales staff may mistake the marginal cost for total cost and sell at a price which will result in a which will result in a loss or low profits. Hence, the sales staff should be cautioned while giving the marginal cost. So basically, what they are saying is the sales staff, the staff at the lower level and all of the organization, they might not know exactly the beauty of marginal costing. When they are given a variable cost, they will think that the variable cost itself is total. So they will try to fix a selling price just so that they will cover the entire variable cost, but it will not be the case. Are you clear with this? So variable cost is not the total cost. Fixed cost is yet to be recovered. Clear with this? So that's why they are saying, right? And it can result in faulty valuations, unpredictable nature. They have just given some, basic things and all. Marginal costing ignores the time factor and investments, right? So basically, what they are saying is a particular job A might take 6 months to complete, job B might take only 4 months to complete. They are not comparable assets. Basically, all this time value of money and all, we don't consider it in short-term decisions. Generally, if a decision is taken for a period less than a year, more than a year anyways, we do it under financial management. So they are mentioning it as a disadvantage for the sake of doing it. Fine, clear with this. And then here, understanding of WIP. Under marginal costing, the stocks and WIP are understated. Why? Because every unit is valued at variable manufacturing cost instead of the full manufacturing cost. So it's undervalued is what they are saying. I wouldn't say it's undervalued, but just because they want to put one additional point, they put it. It's another school of thought. It says valued only at variable cost, it's fair. That is the method. That is the nature of the method itself. Clear with this, guys? Yes. Then differentiate between marginal and absorption costing. Guys, these are some basic differences. You guys just go through it once. Nothing great. We have covered it in depth. Look at this. Only variable costs are considered. Both fixed and variable is considered. All fixed costs are taken as period costs, right? Whereas in marginal costing, the fixed manufacturing costs are actually not treated as period. They are only product. Are you clear with this? So they have given all these particular examples and all that. Yes. Now look at this. Explain and illustrate the break-even chart. So break-even chart we have done. Correct, guys? Yes. Guys, yes. Now we saw the break-even point concept, right? That is, this is the sales line. This is the cost line. The angle that this forms here, right? This looks like opening a mouth, no? Right? This looks like opening a mouth, correct? Right? While you're eating, like you will open your mouth, it looks somewhat like this. This angle that gets formed is called as angle of incidence. Clear with this? If this angle is bigger, it means it is a more profit generation. Let us say here, instead of this, okay, let's say instead of this, how my line looks is, let us say my line looks like this. It's like this, okay. Now you tell me, okay, this is the total. Now you tell me here I have a broader angle of incidence. So which means in this case what happens? This entire line is going to be my profit. This entire area is going to be my profit. Correct? Now if this is not the case, my profit will be only in this particular area. Correct? No? Guys, clear with this? So more the angle of incidence, it represents a higher level of profitability. Clear with this? That is what they have mentioned here. Write short notes on angle of incidence. It is the angle formed by intersection of the sales line and the total cost line at the break-even point. At the break-even point, obviously, because this is the point where my sales and total cost meet to form my break-even point. Correct, guys? The angle that is formed after this is called as angle of incidence. This angle shows the rate at which the profits are being earned once the break-even point has been reached. The wider the angle, the greater is the rate of earnings. A larger angle of incidence with a high margin of safety indicates an extremely profitable situation. Are you clear with this, guys? Yes, that's all. Don't think it's some mathematics angles and all they're asking. It's very simple. This is all it is. And discuss the basic assumptions of cost volume profit analysis. Marginal costing. Main thing that we saw here is this, right? The selling price per unit, variable cost per unit and fixed cost in total are known and remain constant. Apart from that, they've also given some more things. Changes in the level of revenues and cost arise only because of the changes in number of, that is the volumes. Correct? No? That is, if there is a change in the total volume, if there is a change in the total cost or revenue, it's purely because of the change in volume, not because of the components of cost. Because the components of cost are assumed to be constant. Clear with this? The total cost can be separated into two components, fixed and variable. We know this, right? Then graphically, the behavior of total revenues and total costs are linear in relation, right, to the output level with a relevant range, within a relevant range. Meaning what? Linear in relation, meaning it is like a straight line. Okay, see here, you are able to draw a straight line, guys. Correct? You are able to draw a straight line. So the fact that you are able to draw a straight line itself means this is linear. If you have that binomial equation now, you know this. Let's say x is equal to b square plus 2ac. Just an example. Here I have square and all, right? So now if you want to put it in a graph, it will be a curve. If it is a curve, it is not a linear equation. Are you clear with this? Here in our case, it's a linear equation. Very simple. Total cost is equal to fixed cost plus variable cost. Guys, correct? Linear equation. Where is the question of having squares and all? That's why it's a straight line. Clear with this? That's what they have mentioned here. Right? Elaborate the practical application of marginal costing as it's used for pricing, policy, decision making and all of that. Clear with this, guys? Fine. These are some basic level questions that you just read it once and you saw it. With this, we have finished this beautiful chapter called as marginal costing. Such a big chapter. Of all the chapters, this is the biggest chapter, rich with concepts. We saw so many different concepts inside of it, right? So we saw all the learning objectives. Guys, all the learning objectives have been covered, no? Yes, all the learning objectives have been covered. The basic concepts here we covered. Yes, income statement, PV ratio, break-even point, margin of safety, profit, cash break-even point, indifference point, shutdown point, volume analysis. You remember volume analysis? right? Only when the top and the bottom data are given, analyzing it. Sensitivity analysis, up and down arrows, merger of plans. When two plans or more plans are added, you can't add it as such. Convert everything into 100% capacity. Remember that. Then sales mix and marginal costing. We saw BMW example, bike and car. Limiting factor, key factor analysis. Then we saw that also, right? Yes, and then your marginal costing versus absorption costing we just saw. And of course, I asked you to add one more, opportunity cost. Only one I asked you to add. Yes, so the 15th one, that is called as opportunity cost. I'm adding it here also. And that also one sum we have done. Clear, guys? Fine. A very, very detailed and in-depth discussion in this particular chapter. Yes. Let's go and do this. First, now the standard cost system, under the standard cost system, the cost of the product is determined at the beginning. The cost of the product determined at the beginning of the production is what? Is what? Direct cost, predetermined cost, historical cost, actual cost. What is it? Predetermined. The standard cost, that is the cost of the product determined at the beginning of the production is what? Called as predetermined cost. B. Very good. That's all. Next. The deviations between the actuals and standard is known as what? Multiple analysis, variable cost analysis, variance analysis, linear trend analysis. Of the four, which one seems to be correct? C. Variance analysis. Clear? That's why this chapter in CA final is called as standard costing and variance analysis. Clear? We are analyzing for the variance. Clear with this, guys? Are you clear with this? Yes? Then next. The standard cost which is attainable under the favorable conditions is called as what? Is called as what? The standard which is attainable at favorable conditions, that is, the standard which is attainable at favorable condition, it's called as theoretical standard, expected standard, normal standard, basic standard. What is this? They have just given all these things for the heck of it. It's obviously the normal standard, correct? At the normal standard conditions, what are the things that you will generally be having? Correct? That is called as normal standard. This is like saying special dosa, special sada dosa. Like that, they are giving some options just for the sake of it. How can there be a special sada dosa? Fine. Anyways, it's a normal standard. Are you clear with this? Sorry, guys. I'm sorry, guys. Once again, I'm so sorry. I'm so sorry. I just stand corrected. I just stand corrected. Once again, let us just read this. The standard which is attainable under favorable conditions. The standard which is attainable under favorable conditions. Okay, that is not normal. That is a theoretical standard. Okay, let me tell you what it is. It's called as theoretical standard. Let me tell you what it is. Recall our discussion that we did in our overheads chapter. Guys, there I told you capacities are of different types. Normal capacity, theoretical capacity, actual capacity, and all these things. So basically what they are saying is, look, the standard which is attainable under favorable condition, that is theoretically what I can achieve for the actual output, what can be achieved is called as theoretical standard. I will not call it as normal standard because normal standard will be for my budgeted level. Are you clear with this? Normal standard will be for my budgeted level. Are you clear with this? Normal will be for what? My budgeted level. Theoretical standard means what? For the actual production, theoretically, what is the cost you should have incurred or how many hours you should have spent? Are you clear with this? Guys, are you clear with this? Yes. So here it is theoretical standard. I stand corrected. It is not normal standard. It is theoretical standard. Clear with this? Are you getting it? Theoretical standard means what? For the actual output, what should have been the cost you should have incurred or how many hours you should have spent? Are you clear with this? Theoretically speaking, this is what you should have incurred. Are you clear with this, guys? Guys, are you all clear with this? Yes. The next one, fourth, the standard most suitable from cost control point of view. The standard which is most suitable from a cost control point of view, I'll tell you, is expected standard. What is this? I will tell you. Certain things we will learn it from the MCQs. These are theoretical points. What is it? the standard which is most suitable from cost control point of view. Cost control. This chapter is all about what? Control objective. Right? Yes. Yes, guys. Yes. So now what we will do is, look at this. For my actuals, that is, for my actuals, how much I should have incurred, that we calculate here. Correct? Right? Right? Are you clear with this? Are you clear with this? For my actuals, so first on the basis on which I calculate, that is done here. For my actuals, how much you should be incurring, that's called as expected standard. That is, what am I expecting out of you versus what you are actually doing. This is how the performance appraisal will be done. Guys, correct? Guys, correct? What I am expecting from you versus what you are actually doing. Only these two can get compared. No, guys, correct? Here I call it as expected standard. Whereas the above, what I do is, if everything is favorable, what you should have achieved, that is called as theoretical standard. Now this might sound confusing. Once again, I will repeat these two. Now, theoretical standard means what? I'm repeating, guys. I'm repeating. Right? You forget whatever I've said till now. I'm repeating this. Theoretical standard means what? If everything is favorable for me, in a favorable situation, what should have been your target? Are you clear with this? What are the things you should have achieved? That's called as theoretical standard. Clear with this? Are you clear with this? But for comparing my actuals, right? For whatever work you have done, what is the cost you should have spent or the hours you should have taken? That is called as expected standard. Expected is for actual production. Correct? Whereas here theoretical is for what? The most favorable condition. I am thinking that if this is my situation, I am able to achieve an output of 1 lakh units. What should have been the standard? Are you clear with this? But for the actual production, what is the expected standard? Are you clear with this, guys? Are you clear with this? That's why, because of this confusion only in certain sums we saw, though they had used the word standard, we took it as budget. Correct? No. Guys, clear with this? Are you clear with this? A standard prepared for a favorable condition is called as a theoretical standard. A standard prepared for an actual condition is called as an expected standard. Clear with this, guys? Clear with this, guys? Don't get confused here. Next, fifth, the overhead cost variance is difference between the overheads recovered on actual output minus the overheads actually incurred. They are talking about fixed overheads. Fixed overheads cost variance is what? Nothing but under or over absorption. That is absorbed minus actuals. Correct? No? Guys, yes. So obviously A is the right answer. Is it the difference between budget and actuals? No. Is it the difference obtained by multiplying the standard overhead absorption rate with the difference between standard hours for actual output, something and all they have given? No. It is a difference between absorbed and actuals. That's called as under or over absorption. Clear with this, guys? Next. Which of the following variances arises when more than one material is used in the manufacturing of a product? When more than one material is used in manufacturing of a product. So what is it? Now look at this. When will I have this? When will I have this variance? 1 second, guys. Now, which of the following variances are there when you have more than one type of raw material? You tell me. Price and usage variance anyways will be there. Guys, correct? Right? So material cost variance, you have material price variance and material usage variance. These two will be there anyways. This usage variance, I told you, will be classified into material mix and material yield variance. Right? Now understand one thing. Mix variance alone will be there when you are having more than one type of raw material. Right? Because if you have a single type of raw material, this yield variance itself will be equal to your usage variance. Yield variance is what? Basically, it is called a sub-usage variance. Now, I told you, you should have consumed so much versus you have consumed so much. Right? That is what is the difference we calculate. Whereas mix variance means what? Mix variance purely will come only when you have different types of raw material. Here I compare actuals with actuals, but actuals at standard mix with actuals at actual mix. Are you clear with this? So technically speaking, when I don't have more than one type of raw material, usage variance is nothing but my yield variance. Yield variance will be there always. Are you clear with this? Right? So mix variance alone will be there when you are having more than one type of raw material. Are you clear with that? That's why I call this as a balancing figure. Clear with this? Only mix variance arises when I have more than one type of raw material. So the balancing figure is my yield variance. If I don't have more than one type of raw material, that yield variance itself becomes my usage variance. Are you clear with this? So the answer here is what? Yield variance. The mix variance. Are you clear with this, guys? Are you clear with this? Yes, you guys are able to follow this. So mix variance will come only when you have more than one type of raw material. Sir, yield variance, it can still be there if you're having only one type of raw material. Are you clear with this, guys? Yes, you guys are able to understand. Just because we classify this into two, don't think that yield variance will not be there when you're having a single raw material. Yield variance is nothing but usage variance when you have a single type of raw material. Clear with this? Yes. Next. If the standard hours for 100 units are 400 hours at the rate of 2 rupees per hour, the actual hours taken are 380 at the rate of 2.5. What is the labor rate variance? Labor rate variance formula. Tell me, guys. Standard rate minus actual rate into actual hours. Standard rate is how much? 2. Actual rate is 2.25. Actual hours is how much? 380. You are taking 0.25 hours, 0.25 rupees more on 380 hours. So how much is that? How much is that, guys? 95 adverse. A. Are you clear with this? And that's about it. Next, controllable costs are best disposed of by transferring to. Logically think, guys, think and answer. Controllable costs are what? Are they avoidable or unavoidable? Think and answer. Controllable, it is controllable. Controllable means avoidable. Correct? Avoidable costs are generally abnormal in nature. So it needs to be taken to your costing P&L. Look how beautifully they have given. Controllable means what? Avoidable. And avoidable means what? Abnormal. And abnormal means taken to costing P&L. Look how beautifully they have given this. Guys, are you clear with this? Are you clear with this? See how and all they have given. So they are to be transferred to cost of goods sold, inventories, WIP, FG. That supplementary rate and all they are confusing. No. Take it to costing P&L. Why? If it is a controllable cost, it means it's avoidable. And whenever it's avoidable, obviously it means it's an abnormal figure. And abnormal figures are taken to my costing P&L. Next. Idle time variance is obtained by multiplying what? A, B, C, D. So it's nothing but actual hours paid minus actual hours worked into standard rate. This is nothing but idle time. Correct? So it's B. It's different between standard and actual hours. No, standard and actuals will not come. Difference between actual labor hours paid and actual labor hours worked into standard rate. Yes. Difference between standard and actuals. No. Idle time will not even have actual standard or not. Standard abnormal idle time will you have? Can you plan for an idle time? If you plan for that idle time, it becomes a normal idle time. Normal idle time gets anyways captured under standard hours. So abnormal itself means what? Abnormal means it's unexpected. So it cannot be in your standards. Clear with this. So it's obviously B. The next one. 10. Basic standards are those standards which require high degree of efficiency and performance. Average standards and are used for long-term planning. Standards which can be attained or achieved, they are assumed to remain unchanged for a long time. So actually, basic standards are assumed to remain unchanged for a long time. I will tell you what it is. Now, basic standards means what? They are saying standard hours, standard rate. To produce 1 unit, you can take 2 hours, and every hour you should spend a maximum of, let us say, 10 rupees. Clear with this? So when they establish the standards, they don't keep changing it regularly. These are meant to be maintained over a period of time, at least for the next 2-3 years. And after that, if there is any changes, we will see it. Clear with this? So generally, basic standards are assumed to remain unchanged for a longer period of time. Are you clear with this? Are you clear with this? Right? So when I'm preparing the standards, I will assume this to remain over a long period of time. Are you clear with this, guys? Yes, they are useful in long-term planning. See, the others are all very vague. Those standards which require high degree of efficiency and performance, who said? No, standard is what you should be incurring, that's all, right? So they are useful for long-term planning, quite vague, which can be attained or achieved. But here, if you see, these remain to be unchanged for a longer period of time, because at times people use the word standard instead of budget also. We saw that, no issue. So here institute is saying that D is correct, but technically speaking, C is also correct. Standards can be standards which can be attained or achieved, basic standards, right? But anyways, institute has taken a stand that D is the right answer. So let us also go with it. Clear with this, guys, right? So with this, we have finished all the MCQs in this chapter. Let's quickly go and capture up the theory section. How many questions? Just 3 questions there. Let's quickly knock it off. So what is it? Describe 3 distinct groups of variances that arise in standard costing. Look at this, how they have clubbed it. Variances of efficiency, right? Variances of efficiency. This efficiency or usage is there, correct? No, if it is in materials, you call it as usage. Labor and overheads, you call it as efficiency. Then your variances in price and rates, right? Price and rates. If it is material, you call it as price. If it is overheads, you call it as rates, right? And finally, you have due to volume. This is generally there only for fixed overheads. Are you clear with this? See how theoretically they have classified this. If in the exam they are asking you, practically you just write down efficiency, usage, prices and rates, and one more thing is volume. Are you clear with this? Logically you write down. Why will they reduce marks? That's about it. Next, calculation of variances in standard costing is not an end itself, but a means to an end. What are they saying? What are they saying? Right? So now what they are saying here is the calculation of variances in standard costing is not an end by itself. It's a mean to an end. Basically what they are saying, just because you do standard costing, automatically things will not fall in place. If you use standard costing, you know where you stand. That is, you know the variance. That of course needs to be corrected. Are you clear with this? Are you clear with this? So the crux of standard costing lies in what? In the variance analysis, where you can compare it with the actuals. Are you clear with this? Right? Now with this variance, you need to analyze the performance, and the corrections need to be made in the future. Only then you will get the benefit out of it. Are you clear with this, guys? Are you clear with this? Fine. That's what they have given here. Quickly just read it. And describe the various steps involved in adopting standard costing system. So setting of standards, ascertainment of actual cost, comparing the actuals with standards, investigating the variances, right? And disposition of variances. Meaning what? If there is a variance, if it is due to abnormal reasons, take it to the costing P&L and all. And not just that, what you need to do right now is you now need to take corrective actions. That is, you should reward or you should punish the respective employees. Are you clear with this, guys? Fine. And that's about this beautiful chapter called as standard costing. First one. Shall we?
Yes, sir.
Yes. Now, number 1, if a company wishes to establish a factory overhead budget system in which the estimated costs can be derived directly from the estimates of activity level, it should prepare what budget? A master budget, cash budget, flexible budget, fixed budget. Out of these 4, which one is more sensible? Unmute. Obviously a flexible budget, right? Master budget, no, I am planning to only give factory overhead. Master budget will have sales, all the components of cost, everything. Cash budget, nowhere related to this. Fixed budget, I can give, but it will be only for one volume level. Only if I give a flexible budget, I will know, okay, if this is the volume, this will be my factory overhead. If my volume is increased or decreased, accordingly, what will be my different factory overhead? Are you clear with this? Very good. Next, The classification of fixed and variable cost is useful for preparation of which budget? Master flexible cash capital. Obviously, once again, flexible budget. Clear with this. It's a no-brainer. We all know it. Next, a budget manual. Just now we saw. It's a document. What? A, it contains different types of budgets to be formulated only. B, which contains the details about the standard cost of the products to be made. C, setting out the budget organization, the procedures for preparing a budget, including the fixation of responsibilities, formats, records required for the purpose of preparing a budget and for exercising the budgetary control system. None of the above. A, B, C, D. Obviously, it's C because it comes along with the responsibilities we just saw. That's a very comprehensive document. Then, the fourth one. The budget control organization is usually headed by a top executive who is known as the budget control organization. The budgeting control is done by the budget director or a budget controller. Are you clear with this? Generally, this is the guy who takes care of the budgeting team. Are you clear with this? Guys, yes? Again, it's kind of a very generic question. Then question number 5. A favorable budget variance is always an indication of efficient performance. Do you agree? Give reason. What do you say? I'm telling you, the question is a favorable budget variance. If you get a favorable variance, it means that the person who is doing the job, the responsible person, is efficient. Is it true or false? If so, give reason. A, B, C, D, you read. Tell me which one you find it as reasonable and suitable. A favorable variance indicates savings on the part of the organization. Hence, it indicates efficient performance of organization. B, under all situations, a favorable variance of an organization speaks out about the efficient performance. C, a favorable variance does not necessarily indicate efficient performance because such a variance might have been arrived at by not carrying out the expenses mentioned in the budget. D, not the above. A, B, C, D. Which one you feel is correct?
B.
Which one you feel is correct? Huh? Obviously, it's C. Why? Example, I'm telling you. You recall material mix variance. Yes, I have two products, A, B. A is a costly product, B is a cheap product. Right? Now, what happened? If I use more of a cheap product, right, and less of a costly product, what happens? My cost becomes less. I get a favorable variance. Now you tell me, is it because of the guy's efficiency? No. What he has done, it might have been arrived at by not carrying out the expenses as mentioned in the budget. He should have used the right mix of what? A costly and a cheap. What he did, he used more of a cheap raw material, lesser of a costly raw material. Hence, he is attaining a favorable budget. So always remember, favorable budget is not directly linked to efficiency. Yes, at times it could be, but at times it also means that don't think that's a huge favorable variance. Excellent. Financially, it could be so, but if you look at it, there could be a compromise on your quality. A favorable variance should not be arrived at by compromising your quality. You should retain the quality and still achieve a favorable variance. That is the good standard. Clear with this, guys? Right? So C is the right answer. Next, a budget report is prepared on the principle of exception and thus only unfavorable variances should be shown. Only favorable variances should be shown. Only unfavorable, only favorable, both favorable and unfavorable variances should be shown. None of the above. A, B, C, D.
C.
Obviously, you should show both the favorable and adverse. Are you clear with this? Right, just now we saw, just because you have a favorable variance, it doesn't mean that it's always good. Right? Fine, clear with this? That's why. Next. Purchases budget and the materials budget are same. This is what they have asked here. Purchase budget is a budget which includes only the details of all materials purchases. Purchase budget is a wider concept and thus includes not only purchase of materials but also other items as well. Purchases budget is different from materials budget. It includes purchases of other items only. None of the above. Actually, here a purchases budget is a wider concept and thus includes not only purchase of material but also other items as well. This is the right answer. That is, in factories, they have something called as a purchase register or not. In this, what will they maintain? Not just the direct materials, even the indirect materials. For example, They purchased so many bottles of lubricants, right? Is lubricant your direct material? No, but that might also be getting tracked. No, it's a purchase register based on the purchase budget. Are you clear with this? Right? So it's a very broader concept. So purchase budget includes material budget, but material budget does not include purchase budget. Are you clear with this? Are you clear with this, guys? Right? Next, efficiency ratio. Efficiency ratio is number one, the extent of actual working days avoided due to budget. Is it so? No, this is calendar ratio. Guys, correct? Right? It is activity ratio or capacity ratio. We'll come to it. Whether the activity, actual activity is more or less than the budget activity. No, here we don't compare the actual with budgeted. Are you clear with this? I can maybe call it as an activity ratio, or I can even call it as a capacity ratio. Here, this is the most nearest thing to your efficiency ratio. Though they are technically different, Institute has taken a stand that efficiency ratio can be compared with your activity ratios. Clear with this? Guys, clear with this, guys? Right? Next, activity ratio depicts what? Depicts what? A, B, C, D. Whether the actual capacity utilized exceeds or falls short of budgeted capacity. No, this is not what it says. Whether the actual hours used for actual production were more or less than the standard hours. No, this is also not what it says. Whether the actual activity was more or less than the budgeted capacity. Yes, this is something that it says. Activity ratio, I budgeted so much activity. How much is your actuals? So I want to know what is your activity level. Are you clear with this, guys? Yes, we saw this, no, in budget ratio concept. And which of the following is usually a short-term budget? Which of this is a short-term budget? A, B, C, D. CapEx, is it short-term? Hello? Capital expenditure is a short-term? No. Research and development short-term, huh? No. Cash budget? Cash budget? Yes, definitely. Right? It's a short-term budget. Sales budget, at times, even sales can be projected for 3, 4, 5 years and all. But anyways, off the lot, it makes sense to call cash budget as what? As a short-term budget. Clear with this, guys? Right? Fine. And that's about this particular chapter. And of course, you have quite a few what? You have quite a few theory questions, right? I think we have covered all the theory. Look at this, limitations of budgetary control. You just give it a reading once, that's all. What are the important points an organization should consider if it wants to adopt performance budgeting? We just saw what do you mean by performance budgeting, right? Fine. So, comparing the budget with the actuals and taking corrective actions, the budget itself, right? What do you mean by a budget manual? We have seen it, right? Describe the salient features of a budget manual, right? Just write 4 or 5 points that you know, that's all. Describe the steps necessary for establishing a good budgetary control system, right? So again, some very generic points. Give it a reading and that's about it. And there is not much of value addition where I can explain and all this. Zero-based budgeting, those concepts require explanation. This is not a very great thing. Again, flexible budget, we all know what's a flexible budget, right? Flexing it for different output levels, right? Then discuss the components of budgetary control system. Then list 8 functional budgets prepared by a company. You can just list it out. They've just asked you to list it. You can just mention. And distinguish between fixed and flexible. Again, that's something that we've done. Explain the essentials of a budget. So what all it should have. It should be based on future plan of actions. It relates to a future period and based on the objectives to be achieved. It is a statement expressed in monetary and or physical units prepared for implementation and all these things. Clear with this, guys, right? Just very generic. Say the consideration on which capital expenditure budget should be prepared. So when you're preparing a capex budget, what are the considerations that you need to consider? So think about the plant utilization, the future development plans, replacement requests, and sales potential and all these things. You know, these are general points once again, right? And describe the steps involved in budgetary control techniques. Just give it a reading and that's about it. Activity-based budgeting. What do you mean by that? Right, so that's what it is. So activity-based budgeting is what? Instead of preparing a budget based on your departments, you now prepare the budget based on your activities, right? And the results of each of these activities are compared to the actuals and you take the corrective action. So basically it is what reversing of the ABC process. Using activity based costing in the budgeting process is called as ABC costing, to put it in simple words. Clear with this, guys? Give it a reading and you're done here. Then advantage of zero based budgeting, we all know it is precise and it's a very effective control too. We do a thorough cost benefit analysis, and if there is any wasteful expenditure, it can be easily identified. How? Because that is also based on activity based costing only. Clear with this, guys? Guys, yes. Yes. And the next question is about the budget manual. See how many theory questions they have asked in this chapter. Fixed and flexible budget. Once again, they have asked it here. Then what are the cases when a flexible budget is found usable? Of course, we all love flexible budget. It's all very much required. In case of a new business venture, that is, you are starting a business, will you be exactly able to predict your sales? No, I will say, sir, prepare 3 budgets for me. If my volume is 5,000 units, what will be all my budgeted cost and budgeted sales? If it is 6,000 units, prepare one budget. If it is 7,000 units, prepare one budget. So I will need a flexible budget concept in the case of a new business venture. Clear with this? Right? And where a business is dependent upon the mercy of nature, for example, agricultural business, right? Again, here I need to have different possibilities, right? Alternatives. For me to have multiple alternatives, I need a flexible budget. Once again, here, labor intensive industries where the production of a concerned department is upon the availability of labor. We all know limiting factors. When I have limiting factors, and again, I need to be ready for different types of alternatives, again, for which I need a flexible budget. Clear with this, guys? Just 3 they have just mentioned. So that's about it, guys. It's not a big deal at all. Provided you understand the concepts, you can just put it in your own language. That's about it. Look at this, zero-based budgeting and various stages. It's a popular exam question. Popular exam question. Yes, we have done it. Just go through it once and that's about it. Are you clear with this? And the steps involved in zero-based budgeting: identification, evaluation, ranking, and allocation of resources. Are you clear with this, guys? Right? Again, I'm telling you, in case of theory, just go through it once, because generally the last question is your theory question and you have an internal choice also, right? So be careful about that. Just be prepared. Don't break your head in all these things. One reading you give, because conceptually I've explained everything. With that you will be able to handle. Are you clear with this? Don't take extra efforts in mugging up and all. Nothing of that sort is required. Clear with this? Advantages, limitations, give it one reading, put it in your own language. 4 or 5 points, can't you write? You have studied so much, you have spent so much time in the subject, just a matter of 4 or 5 points and you're done there. Clear with this, guys? And with this, we have finished the most yet another beautiful chapter called as budget costing. Sorry, that's going to be budget and budgetary control, right? Shall we begin? Okay.
Yes.
First, guys, come on, quickly you need to answer. The composite cost unit for a hospital is what? ABCD. Obviously, per patient day, or sometimes you can even call it as per bed day. Next, the cost of diesel and lubricant is an example of. Diesel and lubricants generally is for, let's say, for your transportation sector. No. Operating cost, fixed charges, semi-variable cost, none of the above. Which can you put it? You put it as operating cost. I don't know what relevance it has got. Even fixed costs are operating only, no? I don't know why they have asked this. But the most reasonable thing that appeals to us is operating cost. Are you clear with this? It's not a non-operating item. Fine, it's an operating cost for sure. Then the cost units used in power sector is what? We just did. Kilowatt hours. Next, absolute ton kilometer. Absolute ton kilometer is an example of composite cost unit in which sector? Power, transport, bus, or oil and natural gas. Right? It's going to be transport sector. Ideally speaking, in transport sector you have 2: goods transport and passenger transport. But they have given here passenger. They should have ideally given goods, but anyways, they have just mentioned transport sector. Guys, any problem here? We all know this. Next, depreciation is treated as a fixed cost if it is related to, wow, depreciation is treated as a fixed cost. I told you guys, no? You remember? AS 10, accounting standard, not cost accounting standard, accounting standard 10, property, plant and equipment, right? You might have a question, sir, I incur more depreciation only because I am using my, only if the production increases, more wear and tear means more depreciation. But I told you, depreciation is not just a provision for wear and tear, it is also a provision for affluction of time. You remember that affluction means what? Passage of time, right? So that is what they have asked here. Look, back then I linked it along with your AS10, right? Fine. And look what they've asked here. Look what they've asked here. Affluction of time. Many people might not even know what this means, right? Affluction means passage of time. Sir, even if you don't use it, you need to provide for depreciation. Are you clear with this? Right. Next, jobs undertaken by IT and ITES. ITES means what? Information technology enabled services, right? Organizations are considered as what? You call their jobs at what? As what? Project, batch work, contract, all of the above. Obviously, it's project. We did one question, you remember, engineers and all, and remember we calculated the absorption rate, unique sum we did. Then, in toll road costing, the repetitive costs include what? What are the repetitive costs? Maintenance cost is repetitive or annual operating cost is repetitive? Or none of the above, both? Repetitive, ma. Repetitive means frequently incurred. Maintenance, annual operating is incurred only yearly once. Maintenance, obviously, you need to do every day. Are you clear with this? Bought means what? Bought means what? ABCD. ABCD. Obviously, it's A. Build, operate, transfer. Buy, operate, transfer. Build, operate, thrash. Build, own, thrash. Right? So, it's build, operate, and transfer. Next. Pre-product development activities in insurance company includes what? Includes what? Pre-product development means what? I am coming up with an insurance policy. So in this insurance policy, what are all the things that I need to incorporate? Pre-product development. I have not developed. So what are all the pre-product development activities that will be included in my insurance sector? Processing of a claim. Is this activity done before designing the policy, or processing of claim is done afterwards? How much before? Processing of a claim means what? You have taken an insurance policy, right? Let's say you have taken a health policy and you have fallen ill, you went to an hospital, right? So you need to pay the hospital bill, you are making a claim. You will make the claim only after buying the policy, no? Right? This activity is not there. Selling the policy, obviously the policy gets framed only after that. Their sales staff can sell it. This is also not pre. Yes. Provision of conditions. Yes. What are all the terms and conditions that need to be included? This I decide even before the policy is being developed. Are you clear with this? Policy application processing. When will you apply? Only after the policy is established. Are you clear with this? Logically think. It's not related to costing. Are you clear with this? Claims means what? Claim processing means you are making a claim to them after issuance of policy only. Next, which of the following costing method is not appropriate for costing of educational institution? Which of the following? Batch costing, ABC, absorption costing, process costing. Out of the four, which is definitely not appropriate for educational institution? Obviously, process costing. Sir, can I use batch costing? Yes. Why not? You have multiple batches. Guys, correct? In CA coaching itself, you take batch wise. I can take, no, it's even called as batch only, right? Batch 1, batch 2, morning batch, evening batch. You would have heard many people say that. Activity based costing, I can use it anywhere. It's not industry specific. Absorption costing, once again, I can use it anywhere. It's a technique. Techniques can be used anywhere. Clear with this? Yes. You remember we had absorbed, we reapportioned that maths teacher and economics teachers wages and all. You remember? Absorption costing can be done anywhere. Process costing, no, it's a very, very specialized way of costing which is used only in a sector where to convert an output, the input has to pass through multiple processes and the output of the previous process becomes the input of the next process. Now, there is no such concept here, right? There is no such concept here, and yes, that is the reason clearly you can negate it. Are you clear with this? Right, guys? Done? Yes, done? Sir. Fine. So, with this, we have also completed what? We have also completed the MCQs. Can we just quickly go to the theory section? Please take the theory part. Shall we? Okay. First, describe operation costing with examples of two industries where operation costing is applied. Now, guys, I told you operation costing is another word used for service costing, not operating. I said operation. Operating costing comes under process. Process and operation, they say. Whereas here it's service costing or operating costing. Clear with this? So, operation, it has to ideally be operating only. Okay. Okay, it's actually operating costing. It's not operation. They have given this. Anyways, guys, operating costing. Ideally, it's called as operating costing. There only we call it as operations. Anyways, so they have asked you with examples of two industries. You can bring in any industries. It's a product costing system which is used when a company produces more than one variant of a final. Okay, guys, I'm so sorry. Our DTP person has wrongly included here. This should come under process costing chapter only. You should come under process costing chapter only. Look, it is used when an entity produces more than one variant of a final product using different materials but with similar conversion activities. I told you, right? So the joint and byproducts, that is an example of operation costing, right? So that's why I said it's an extension of process costing chapter. In the process costing chapter, finally they have given one paragraph called as operation costing. If you remember, I read it and I told you that is actually the next chapter that we are going to see, joint and buy and all. You guys remember? By mistake, I think our DTP person has kept it here. It is not the case. This should come under process costing only, right? So all these things they have just mentioned, the meaning of that and all. It's a hybrid process product costing system. All these things they have just mentioned, right? And two examples are ready-made garments, jewelry making and all that they have just given. So more than one type of output emerging out of a common process. Guys, clear with this, guys, right? So that is what they have just given. Again, you need not write the exact words, know the concept and put it in your own language. Clear with this. Next, describe composite cost unit as used in service costing and discuss the ways of computing it. It was tested long back, November 19, very long back, right? Now, guys, what do you mean by a composite cost unit? When you have more than one cost object which drives your cost together, it's called as a composite cost object. Look at this. Sometimes two measurement units are combined together to know the cost of the service or operation. These are called as composite cost units. For example, a public transportation undertaking, it would be what? Per passenger per kilometer. So examples are ton kilometers, quintal kilometers, passenger kilometer, patient days, room days, bed days. You can take a lot of examples. Are you clear with this? Right? Many examples. Every single industry you can take. Passenger kilometer, ton kilometer. And I just said hospital days, room days, patient days, room days or bed days, whatever it is. There are so many things that you can take, kilowatt hours, all these things. And of course, it can be calculated on two bases, absolute and commercial. Absolute means what? Weighted average. Commercial means simple average. How do you compute and all? It is just given. Are you clear with this, guys? Right? If you want, you can take an example and even put it with numerical figures if they have asked. Clear with this? That's about it. Right? So whatever we have done, they have just given it in a statistical format. So first, sum total of simple average means what? Sum total of all the distances plus a simple average of the weight carried. Correct, guys? Yes, you remember. You remember this, right? So the number of total weight transported divided by the number of journeys, you get the simple average of the weight carried on an average. Multiply with the total distance covered. Simple average. Yes. Differentiate between service and product costing. It's a very basic and a fundamental thing. Product costing is what? For products. Right? For physical units. Service is what? For a service sector. Look, so here, look at this. Unlike products, services are intangible, cannot be stored. Hence, there is no concept of inventory. Yes? Logical. Guys, you have to read it once, only then in the exam it will strike. See, there is nothing new you are learning, but only if you read this theory, just spend 2 minutes time, that's all. Right? You will know that, okay, these points I can write. It will open up. Then the use of composite cost units for cost measurement and to express the volume of outputs. There, I don't have the problem of composite cost units. I know 1 unit of my output is going to be 1 unit. That's all. But here, I need to arrive at the composite cost units. I need to find out what is my cost objective and all. Unlike a product manufacturing, employee or labor cost constitutes a major element than material cost. In case of a company that is the business of manufacturing goods, the predominant cost is generally material. Whereas in case of service organization, the predominant cost is generally labor. Correct? Example, you take IT sector, right? So many examples you can take generally. Then indirect costs like admin overheads are generally have a significant proportion in total cost of service, as unlike manufacturing sector, service sector heavily depends on support services and traceability of cost for service may not be economically feasible. So here, in case of service sector, you have huge administration costs. Why? Because I'm not producing a product to say that, okay, product driven costs are more. Predominantly it's administration driven. So I cannot trace them, and at some point of time, you can not clearly make a distinction whether it's an administration related cost or it is a production related cost, because you don't have a production here. Are you clear with this? Are you clear with this? It's how the industry operates. That's why we take all the operating costs, normal operating costs, we take it for the purpose of calculating the cost per cost object. Any abnormalities like penalty, fines, interest and all, that alone we take it to the costing P&L. Clear with this, guys? Right? Fine. Then explain standing charges and running charges in case of transport organization. List 3 examples of both. Standing means what? Hello? Fixed cost. Running means what? Variable cost. That's about it, right? So these are fixed costs. Example, insurance, license fee, road tax, etc. Taxes, depreciation, garage costs, salary to driver, conductor, cleaners, admin expenses, all these things. Running charges, generally petrol, diesel, lubricants and all these things. Your wages, if it is based on what? Your wages to your bus conductor, if it is based on commission on taking, right? All these things, if they are there, then you can take it. Are you clear with this? Whatever comes to your mind, practically, logically, right? 5 marks they are giving you for this. 4 or 5 marks they will give you for this. That's about it. Guys, clear with this, guys? Clear with this? Right? So, with this, we have finished not just this chapter, but we have finished the entire syllabus of CA Intermediate Cost and Management Accounting. So, all the chapters are done. All the chapters are done right now, and including costing theory and as well as MCQs. Every single chapter we have covered. We have done a very comprehensive coverage, right? And of course, guys, even for this chapter, please immediately go and do your practice manual questions. Please do your practice manual questions. So all your past 10 plus exam questions and 10 plus RTP questions, I've compiled it chapter wise. Please do it. Please do it. It's available on our website. You can download it free of cost. Absolutely no problem. Please do it. But it's a must have for every single student. Okay, clear with this, guys? Fine.